gotta go back. Watch AVGO here. We got coin. Damn it. Watch NVIDIA. Nice little pullback on these stocks today. I gotta go. I forgot something. Well, I gotta do it, so. I gotta get the bag. I will be right back. I'll probably get a bounce. I might trade it on my... I gotta go. I just can't leave that out there. Where am I?
Okay, that one is under some pressure right now. That stock down 11%. And it's not so much about the quarter. It's just about, they didn't do anything different with guidance here. So SoFi mostly in line with expectations. Adjusted EPS coming in at 12 cents. Street was looking for that number. Revenue coming in at 1.09 billion. That was actually a B, but it's not enough for investors today because they didn't raise their full year guidance. This has been a high growth stock. There was elevated expectations around it. So
those are always mistakes when they do that. They're doing the same shit they did last year.
The growth is still strong in terms of some strength. Total members rose 14.7 million. They added roughly a million new members, give or take. Deposits climbed to 40.2 billion. So customers are still using SoFi as a banking platform. Lending business is still the engine here. Loan originations surging 68% year over year. Personal loans did hit a record. Student loan originations jumped. We know that was originally its bread and butter. That jumped 119% for student loans. Home loans also jumping more than 100% here. But expectations were high going into this one. And it looks like, listen, they just couldn't meet the mark on where these expectations were, especially in the sense of coming in line. So year to date, just adding to some of the pressure that we've had on a year-over-year basis is still doing better, but not so far this year, Nicole.
Okay. Diane King Hall, thank you for all of those. Appreciate it. And coming up, I want to talk all about the metals because we have a special guest, the CEO of Gold Royalty Corp, joins me at the desk to talk about the outlook for metals and mining, a very hot area for investing. What's next? We'll be right back.
While others recap the news, I help you read between the lines from what's moving markets to what's next with sharp takes and market know-how. Follow me on all social media platforms at Diane King Hall and connect with me on LinkedIn for more.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Live insights, actionable data, and market-moving analysis. Schwab Network connects the headlines to the why in real time. Watch free 24/7 at schwabnetwork.com.
Welcome back to Opening Bell. It's time for the very latest here on the floor, all about metals and mining. David Garofalo is with us, Chairman and CEO of Gold Royalty. I'm so glad that you are with us today, and you're ringing the closing bell, right? Is that right?
It is.
Oh, okay.
Yeah.
What is the celebration today?
It's our 5th anniversary since our listing in March of 2021.
GROY. You can check it out, folks, right? So congratulations to you and your team. I wanted to ask you, look, last year, at the end of the year, I did a piece on what a monumental year it was for gold, for silver, I mean, for everything, for everything we looked at, copper, platinum, it was just something else. When you're seeing 50%, 70%, 100%, what now? I mean, because people still really believe in metals as an important part of an investment strategy. Is it, and why?
Yeah, it hasn't just been a monumental year, it's been a monumental half century. If you go back to when we abandoned the gold standard early 1970s, gold's gone from $35 an ounce. The recent peak has been $5,600 an ounce. The purchasing power of our underlying currencies declined by 99% over that period of time. So that dynamic is unlikely to change anytime soon. And given the amount of debt that we've strapped on globally, 350% debt to GDP globally, all-time highs, there's no other way for governments to deal with that debt other than debase the fiat currencies underlying that debt. So gold is likely to see a doubling from here at a minimum.
So debasing currencies. So the value of our dollar, is not going to be the same, and you better buy some gold.
Yeah, gold is the one currency you can't print.
But buying gold is so, obviously I was just looking at silver up 115% over 1 year, because I'm just trying to get the latest numbers. And for gold up, for 1 year, up 35%. It went up, as you noted, to 5,600 a troy ounce. Where is gold headed?
Yeah, look, I think if you look at gold's relationship to M2 money supply, historically there's been a very high correlation between the two. So as money supply is expanded, the value of gold goes up because the amount of gold is quite finite. It can't be mined readily. We can't expand the supply readily.
Right.
So as a result, if you look at where M2 money supply is, gold should be double where it is now, or closer to about $10,000 an ounce based on that historic correlation.
Well, how quickly can we get to, first of all, the old highs, and then to that doubling?
Well, we could get there tomorrow. I mean, that's the type of volatility we're experiencing in the equity markets and generally. And we've seen gold sell off recently because gold is one of the most liquid commodities available. So when it's a risk-off market, as it has been over the last month or so since the Iran war, we've seen capital come out of gold because it is one of the more liquid commodities where you can realize liquidity very quickly. But as risk capital comes back into the market, gold's fundamentals, which are firmly entrenched, are going to take hold again. And I do think that we're going to see gold double from here.
So when you're providing the finance solutions for metals and mining's industry, not only here at home, but Canada, as you know well, and Brazil and Mexico, all these other places, what's the demand for the financing? What does the industry landscape look like?
Well, given where commodity prices are, and it's not just gold, it's across the entire metals complex, we're seeing incentive prices being reached for new mine development. New mine development is very capital intensive. It requires capital from multiple sources. We provide a pool of capital in return for taking a royalty in the property. That's effectively what our business is. We're a financial institution, specifically and singularly focused on metal development.
Understood. I mean, when you think about silver, where do you think, is silver the same story? Sort of the little brother to gold? I don't know. What do you think? There were times when gold was at highs and people were then turning to silver to buy silver because gold had already run up too much.
And I think much of the market sees silver as a proxy for gold. And historically, the ratio between gold to silver prices is closer to 40-1. When it gets above 70-81, we start to see capital pile into silver, and we see silver outperform. So we're in that kind of 60-1 ratio range. It's kind of neutral, but again, when we see that ratio expand, we start to see capital come into silver, and silver outperforms gold.
So when they're buying GROY, what are they actually getting? They're not getting gold, right? I mean, you're getting the company that sort of invests in metal and mining, right?
What you're getting is unmitigated leverage to the gold price because we have top-line exposure at the mine level. We have over 250 royalties on 250 separate mines and projects. Every dollar of revenue, gross revenue, we get a fixed percentage of. So as the gold price goes up, we get a percentage of that top line. So we're completely insulated from cost inflation at the mine site. It doesn't matter what the cost structure is. and that's why we get unmitigated leverage of the gold price. The other element of our story is we also get leverage to the exploration success of our operating partners. So as these operators drill out their deposits, grow them geologically, we get the benefit of that upside because our royalty not only extends the existing reserves, but any growth in reserves in the ground as a result of the exploration efforts of our operating partners.
And how do you feel about, how the Iran war really translates into this industry for investors in metals and mining? Because you have the Iran war, which keeps oil higher, rising inflation concerns. That reinforces the expectations for higher for longer rates. Where does metals and mining fit in there? Do you get that? Do you still get in there now?
Yeah, gold is like the canary in the gold mine. Gold is a proxy for the expectations of inflation. And so we've seen gold go up because inflation means a deterioration of the purchasing power of our fiat currencies, and gold is a proxy for that. Gold is a currency more than it is a commodity. It's a reflection of the underlying value of the fiat currencies it's denominated in. And so we've seen a steady deterioration in the purchasing power of those fiat currencies, and the value of gold goes up in those dollar denomination terms.
Okay. Listen, you might not like this question, but some people might say, David, why should I buy gold over Bitcoin?
Well, gold has intrinsic value. It has been a currency for 4 millennia, recognized as such around the world. And it's fungible. You can go in any corner of the universe with an ounce of gold, and everybody understands the intrinsic value of that ounce of gold. You can't say the same for cryptocurrency.
All right, David Garofalo, thank you, Chairman and CEO of Gold Royalty. That was a good answer. And congratulations to you and your team on your 5-year anniversary here at the New York Stock Exchange. We'll watch for you at the closing bell, David. Thank you. Coming up, the key levels to watch here on the charts right now. The Dow's down 277, the S&P's down 17. Kevin Green is with us. We'll be right back.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis.
I'm back in the saddle again. Got a hammer with a long leg doji.
It's a comprehensive view of the market every trading day. Trading 360, in-depth market.
Marley, I love you.
Straight from
Especially when you're so sexy. Okay, well, I didn't miss nothing. We have a 1, 2, 3 with a snake breakout pullback. Kind of bearish. La 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 la. Okay. Totally relaxed. Bum 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 bum. Spy. Start off with 10. Okay, get ready. If we break the 9, I'm in. Then I don't know how short-lived right about now. Triple bottom. Spy. Lotto. Calls. Scalping. Strike is 713. At 104. Right about now. 102. Let's get Jimmy. We're at 113. Not cheat 113, baby. Scalp fast. Come on, give me some more. Just a little bit. There's 113. Take it. VICTORY, that is Washboardjim's battle cry. He starts off with a scalp. I need to pay for some hail damage. So what we had here is a fallen wedge. Now we're coming back to retest. If this thing wants to stay bullish, we got to stay above that line, correct? Someone say yes.
Yes. You're 100% right, Muse.
Muse is a dog name for master. So if I say Muse, that means I'm saying master. Is everybody clear about that? $114, baby. Mute. I will take it to the limit one more time. How's 121 sound to you? I'm all out. Take it to the limit one more time. Ooh. My eyes have seen the coming of the terrible swift sword. We got hail damage yesterday. I don't want to thank the Lord. Why did you do that to me? I'll never understand. Marching on. Glory, glory, hallelujah. Glory, hallelujah. Glory, glory. Very good job there, Rufflestiltskin. Go in there and take a pee break. Walk around on the desk. Falling wedge, triple bottom, 1, 2, 3 bits, sweet spot. Okay, YouTubers in the room, I want you to look at the chart. It's time for another lesson. If you can count to 3, you can trade with me. And if you can count to 4, you just might make a little bit more. So we found the sweet spot. 1 2 bits and a freebie. 1 2 bits, freebie, Forbes. All spoken dog talk. I understand, Muse. Today I'll be expressing a new language called dog talk. Look at your dog and say, Muse. Well, they went to 133, so that could have netted me $300 for the first trade. But no. No. I got a yawn. Glory, glory, hallelujah. Lord. Prepare ye in the name of the Lord. We could come down and do number 4 on Spy. Hallelujah. Glory, glory, hallelujah. Glory, glory, hallelujah. Bobber had a bounce. What the heck? That ain't cool. Jimmy called the double bottom here before he left. IWM. We got a bear flag going on. We got a new low on the video. Meta is at the 200. We got a double top on Apple. Jesus. Oh. I think I need a cheese chip or something in my belly. I miss my dog. Another picture of my dog. Oh, God, it hurts. Total silence is being broken. I think we're going to have a good day. Man, everything's so clean. That or we just consolidate. There's 114 to 127. Again, this is inverse head and shoulders. We go straight across. If we get another pullback, I think we're going to stop right here. Do you understand? I do. We're flagging. We're going to do something here shortly. I don't see the flag, Jim. Will you show it to me? I sure will. Ready? It's going to get difficult. The market maker speaks. As he looks at a squeeze, we got to break the 63. EMA. If you can count to 3, you can trade with me. I think, what do I think? There it is, 1, 2, 3. And we're at 120. For my name's Washboardjim. I'm the founder. Oh, dang it, I wanted to use the other one. I wanted to trade the SPX. Oh, shit. I trade SPY. Well, that's just not right. I want to trade the SPX. Okay. You don't know what you're doing, Jimmy. $120. And I don't know if this might be a little bit more risky as the basketball starts to bounce down. And we have a symmetrical flag here too, so I'm not too scared. Want them? 2 bits in the freebie. 128. Today I'm doing fast scalps. I ain't messing around. For I'm Washboardjim, the founder of the Sneaky Snake trading strategy, where I talk about chart patterns, moving averages, and being in the now. We're out of the triangle. We're above the 63 EMA. Let's take it to 711. Oh, 131. You could bail out here. You can bail out here. Double top. But, I mean, double top. There it is. Now, unless it breaks, it'll give you a nice little run. I want to congratulate the Democrats for a standing ovation to the King yesterday. As he was cutting them down, putting them in their place, and they still stood for him. So congratulations. I'm very patriotic of you. We have full market too. Oh, right. Good job, Rufflestiltskin. You're catching on. It might not be a big win for you, but it's a win, and a win is a win. Be relaxed. Don't say the F word, because you'll jinx yourself. Because we could still go up to the 200 and rest at 711.56. But I'm happy with $100. Well, we got a falling wedge with a symmetrical flag breakout. We respected the 63 EMA. Then we bounced above the 200. Thank you, Prince Charles. Standing ovation for the King. I'll catch you tomorrow. Always clean this, Jim.
Hello?
Yeah.
Yeah, hi, this is George from Healthcare Department. How are you doing today?
I'm playing a guitar right now. You want to listen to me?
Actually, this call is about free subsidies and extra benefits for this year. May I?
Thank you, the King, all the love you bring. Well, we got the 200 SMA in front of us. Can we hit it? A lot of traders sat there and missed it. It's a falling wedge with a symmetrical flag breakout. If you can count to 3, you can learn to trade with me. If you count to 4, you might make a little bit more. If you count to 4, you might make more. So we have a 1M, 2 bits, 3B, and then the wicks, and a 1, 2, 3, boom. Now it's respecting the 9. So this is what you call a clean, very clean chart so far as we speak. We broke the VWAP on the SPY, and we're definitely going to hit the 200. The 200's been a resistance level so far this morning. As I speak, the 200, the 200, the 200, the 200, the 200, and the 200. So that's when you know you're at a hard resistance, correct? Someone say yes. SPX hit it on my TTM squeeze chart. It's a little different for some reason than my regular charts. Oh, that's the SPX. No, that's correct. We hit the VWAP on the /ES. AMD coming up to the 200. Amazon bounce boom. Okay, what's on the watch list today that's hurting? We got coin, Joby. Oh, Joby. Joby. The bull case for Joby stock hitting $70. What? What? Ooh, God, Lord. Oh, I'm not out of cottage cheese. I'm out of cottage cheese. So Joby, bull case for Joby. SPX boom. Spies are at 147. We hit the 200 on the slash ES. SPY hit the 200 SMA here. If you're in the trade, think about it. I'm not sure how he does it, but he does it. Because he sings like a king. Long live the king. Glory, glory, hallelujah. Mister's got a double bottom, MSTR. Google, new high. I'm thinking about going long in Joby. I've been waiting for the perfect opportunity. We're sitting at a triple bottom gate with a big old knife. And I've been wanting to trade Joby for such a long time. Barrel /ES reverse to the 63. Try not to get too crazy today. ACHR down 4%. PLTR down 536. Oh. Oh! No, 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 no. Don't want that. I want that. We have an RSI. I got to watch my phone today because we've had a lot of damage. I got the doors upstairs unlocked. Air conditioners are getting fixed. Oh boy. Intel. Woo! And a guy got out here yesterday and badmouthed INTC on CNBC and Schwab. Ain't that weird how things happen? Analyst. They were bad-mouthing Intel yesterday. Tell me why. It gets, I mean, look at that AMD. Boom. $181 on the SPY. Come on. Glory, glory, hallelujah. Glory, glory, hallelujah. SPX is nearing a resistance to break. Now, if you're in the SPY, I would again think about scaling some out for Bobo. Please. A lot of bears out there. There should be no bears out there at all. We got some big gains here today. The VWAPR and the B for Bug. Bug was here. Where'd Bug go? We got 2CAP. That sounds like a rapper's name. Angel, Randy, and Galvin, and Machine, and G, Probably stands for Greg, I'm thinking. Jesse, Johnny, Ringo, another Johnny, Magnificent, Mark, Mr. Griffith, M, Ricky, and Rufflestiltskin. The QQQ, double top, triple top on the QQQ. We got some resistance levels right now. It's 9:39. If you need in the computer room downstairs, you'll have to go upstairs to investigations and get them to open the door. Or just call me and I'll run down there and get her done. I'm debating if I want to have a sandwich for lunch, not eat salad, but I'll probably eat salad. I've lost a little bit of pounds here lately with sardines and salad. I feel real strong for some reason too, and my leg cramps have gone. So I'm going to keep eating it. I don't care how much mercury I get. If I get any at all. But I'm using almond flour, so that cuts down the calorie intake. 2 eggs, garlic, onion powder, a little bit of paprika, black olives. Today I'll be using cheddar cheese. With a good wad of spit. So it won't stick to my waffle maker. Angel, you ever spit in your food? You can get plenty of salt that way. Okay, we're at a major support level on the SPX. We can come down and hit the 200 and show respect if this does not want to hold. Oh, so I won't get mercury if I eat sardines? QCOM bounced up today, this week. Oh, look at QCOM. Okay. Well, let me see if I got... Man, I get a lot of emails every day. Service plus support, almost 40%. What? The firearm bog, client support team, morning jelly. By invitation only. 4 days, 3 nights, the Hilton. Nope, not want to take that trip. The Hilton. Nothing in here. Okay. Credit score. Man, that's a beautiful trade. So now we got a new resistance we got to break on the SPX. Right there. 7144.41. Okay, I don't need to look at my emails. There's nothing in there. Oh, I don't want that either. Okay, we're starting to pull back some here. We got the 200, and we got this previous high right here, so they'll probably ignore that and hit the 200 on the SPY. I'm thinking about going and making my lunch. I've been off to a late start and still having a good day. Timing was perfect. So I'm glad I did come with it because I was getting ready to buy that this morning. So a bag of trash saved me. So I was raised up young that women liked men that worked hard. I don't think that's the case anymore. Yeah. He looks a little sunburned. AIXI still leading the pack. Now it's pulled back. And penny stocks, GCTK, why Seagate shares are trading higher. Announces publication of peer-reviewed study supporting implantable blood glucose monitoring.
Thanks. It's going to be a really interesting earnings for Microsoft. I think, for several quarters now, the KPI.
Microsoft. Okay. I'm going to get ready to take this trade. Let's see how SPX. We got a bull flag on SPX, bull flag on SPX. There it is. Goodness, how delicious. Eating goober peas, 71.60s at $5. We got a wall to keep the illegals out. Strike is 71.60 at $5. Can we do it? Question is. We got a fallen wedge. Can we hold it? But it, come on, you can do it. Not doing nothing. Tight stop. So far, I'm still bullish. Break it. Falling wedge off the 63 with a golden cross. I don't know how much that means on a one. There's 40. There's 40. Jim, you're up $50 a contract. Have you ever thought about selling? No. Not until I hit the 21. You're up $100, Jim. You said you wanted 100. I might get 200. I might get 150. Is it true that you're going to cook an egg with your salad today? Yes, it is. I need all the protein I can get. There's 570, 560. Now, if you're new to trading, I want to explain a little strategy. It's called, if you can count to 3, you can trade with me. And if you can count to 4, you just might make a little bit more. So we're in the sweet spot. We got a Wenham and a wick and a body. 1, 2, 3. Wenham, 2 bits, 3 bits, 4 bits. But we're getting close to Jimmy's lunch. And I'm the market maker here, so I should have sold him. I would have made $120. Now I'm back to even. So we'll see if it's at the sweet spot right now. This is my last resort. I got all these moving averages underneath it, so I'm hoping, I'm praying, oh Lord, please don't let it go below the moving averages. I'll be taking off my shoes shortly, so I'm going to stink up the room. If anybody would like to help donate to my vacation, please give me a private message. Okay. Now we're at 480, so I got to make a business decision. I'm still going to stay in it for just a little bit longer. I'm not convinced yet. We'll know something here in a second, which way this wants to go. TTM Squeeze is telling me we could go to the upside with that yellow candle down at the bottom. But I'm going to lunch soon. I don't want to be stuck in this trade. So I'm going to get my slippers. Oh. We had some softball hail yesterday. Softball. I never seen anything that big. Okay. We tried to break out. Jim, you're down $20. Have you ever thought about selling? Yeah. But I haven't yet. Jim, you're even. Have you ever thought about selling? No. I bet you Randy's never seen hail that big. You do it like that. You'd be filthy rich. Anybody want to move to Missouri? YouTubers? Oh. Okay. Baseball size hail. Cars were destroyed. Carports were destroyed. Look at that. How sharp that would be if that hit you. That could kill somebody. A lot of hail going on around here yesterday. Well, it's taken forever. I don't think, the longer it takes, the less interested I get in this trade. The 7160s at $5, and they're now at $4.90. You're down $20. Uh-oh, there's the whack right there. I knew it was getting too long. We got 4 bodies. Still bullish. Ugh. Now we're at the, oh, okay. That's not nice. It's not nice. $4.20. Now I have 4 and I'm not going any deeper. $4.20 and $5. You're at $4.60, Jim. Have you ever thought about selling? I'm at the 200 EMA. The crowd's going wild at the sports arena. Come on, baby. You know how much I love you? Average is $4.60. The average is $4.60. My I'm reading low. We failed the falling wedge. AMD hit resistance. You can do it. Make sure y'all hit the like button there on YouTubers. I'm at 420. Tweezer bottom with 3 black crows and a head and shoulders. Inverse head and shoulders on /ES. Almost straight across. So that looks bullish. For sure. If that holds. Then we got a 1, 2, 3. We got another head and shoulders right here. So we got 2 reasons to hold that trade. But we still have Trump deranged syndrome out there. If I sell them at 440, I'm down $80. I can eat that easy. Like, yeah. Yeah, it's going on too long. I don't like being in a trade this long. We're definitely pulling back now. Tesla broke below my 372 today. Oh, YouTube, did I show you the... That's on the north side of town. Probably Kearney Street. Route 66. Yeah. Might go start my lunch.
Growth. I don't think we want to chase returns here, but I think that it is kind of a healthy part of a diversified portfolio. And with geopolitical tensions high, maybe it's not time to ease off just yet.
Jay, really appreciate you being with us today to take a closer look at where we might find some opportunities in this market and how to filter out some of the noise, because there certainly is no shortage of it right now. That's Jay Mehta, co-founder and chief executive at Varaz Advisors. We've got a lot more for you today on Trading 360, so don't go anywhere. We've got the big three coming your way next. 3 stocks, 3 charts, and 3 trades. Rick Ducat will take us through the technicals. Don Kaufman is here to take us through the trades for United Health, the emerging markets ETF, and GE Aerospace. That's all next on Trading 360 on Schwab Network.
We've got a dragonfly on /ES. We've got a hammer on the SPX.
iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange, the countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers, just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
She's got your smile. Carl. Yep, your #1 broker's here to welcome renewable independence.
Actually, we invest with Schwab. We have everything we need all in one place.
I can set up a college fund.
I've been learning about trading strategies.
Schwab helps you generate retirement income. All this Schwab has everything you need is making it cranky.
Does somebody need a map?
Schwab!
Invest your way with Schwab.
Hey, Bob.
Hey, Andrew.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim's my financial consultant. I probably met 20 years ago.
Jim,
I am your financial
answering
consultant.
Questions I ever have makes a huge difference when you have someone that actually cares.
My parents didn't really talk about money at all. In college, everybody around me had money. I didn't want anybody to find out that I wasn't middle class. I was using credit cards to do anything and everything. I ended up with $20,000 of credit card debt. That's when I kind of realized, like, all right, I have a money problem. This is about how my finances got wrecked and how I fixed it. And if I could do that, you can do it too.
Come back
Welcome
to
back to Trading
me.
360. I'm Marley Caden. It's time for the big three. We've got 3 stocks, 3 charts, 3 trades for you. Rick Ducat will take us through the charts as always. Here to take us through the trades, Don Kaufman, the co-founder at Theo.
She makes it sound so
Great to have
interesting.
you back on the show and on Fed Day, nonetheless. So I guess we'll start
Marley.
with a big picture thought on the
Whoa.
markets, but I'd also love to know what you think we're going to hear from Powell and the Fed today, and what sort of reaction we might see.
Smooch.
Yeah, I think that this one is much more less Fed, more earnings tonight. And you can actually see it being reflected inside of the volatility.
Greens have been greens.
SPX. So the SPX options have 0 DTE. So you can look at, if you will, today's volatility literally versus tomorrow. And the marketplace right now is not pricing really anything into it. It's being largely overlooked right now. So if Powell does say anything insightful, I'm not sure exactly what that's going to be. The Fed Fund futures are showing a 100% chance of absolutely nothing occurring. But in the Q&A and his speech, you can always get thrown a little bit of a curveball in the marketplace. And that's something I may actually trade for later today because the volatility is relatively low on today's session.
Yeah, and as far as any sort of commentary or guidance that we might get done about Powell staying on as a governor, what are your thoughts there? Do you think he'll answer those questions today, or are we going to have to wait a little longer on those?
Yeah, I think we're actually going to have to wait. I mean, today, again, to me, is less about Powell and the Fed and much more about some of the earnings and guidance about AI. That's really what we want to hear about, is guidance about AI spending. I don't even care what the numbers are for Google or for Microsoft or for Amazon. It's just going to be guidance. Is anybody actually going to wake up and say, look, I'm not going to spend nearly as much on AI? And if that's the case, then we've got problems in this marketplace.
Yeah, certainly. It's a conversation I've had with many guests about we want to see the monetization, but we also want to see that the spending is continuing and showing to be fruitful. But let's take a look at your charts here and the names that you've picked. Your first one has a really interesting chart. You've got United Health here as your first picture. So take us through here with the big three. Number 1, United Health.
Yeah, in a moment when Rick shows us the chart, United Healthcare, back it up like a year, even 3 years. This chart is what I term like a gap-filled wonderland. I mean, yes, there's some earnings gaps in here, but generally speaking, it's just all over the place. So what I'm seeing right now that I think is right up front, appetizing for a trade, is that we've had this really explosive move recently to the upside, but there's been some big-time overhead kind of resistance at 380. I think we're going to run out of gas and actually pull back quite dramatically here in the near term. So what I'm actually looking for, again, right around this 380 level, little overhead resistance.
UNH had a
starts
run
to
yesterday.
fade a little bit, runs out of gas. I'm actually building a trade for the May 22nd expiration because, again, I'm looking for a trade a little bit more in the here and now. In that May 22nd expiration, I'm going to buy the 365 puts. I'm going to sell the 355 puts against it. So it's a $10 wide put spread. 365 selling the 355. This one's done for a $3.80 debit. And those 365s are already slightly in the money. Again, running out of gas. Looks like it's starting to participate to the downside right here, right now.
Yeah, right now at 367, so just ever so slightly in the money. But I look at this chart and it looks like a stair climber workout class to me or something, Rick. You know, we've gone up, we got tired, we go up again, we're tired, we go big at the end.
Yeah, certainly a chart that the most pronounced feature is these gaps. They're very prevalent here, and we can see that we've had several major ones recently during our most recent climb here. So earnings was a big one here. We opened up near, or rather we closed after the earnings event to the upside near 347. Roughly matches up with this gap that we saw here. Meanwhile, to the upside, 377, all the way back here near you, Marley, we had that gap, and then that was subsequent highs. So that's the point to watch out for going forward for potential resistance. To the downside, you know, not really too much to work with here in the near term. You could say we could fill this gap near about 325, but another more notable one matches up with this range here. That's around 295. So now if you look at our moving averages, our closest one is our 5-day EMA in dark blue here near 359. Meanwhile, our 251 in orange, our longest term yearly moving average, 342. So that could be a notable supportive area if we do break through the confluence of our 5-day EMA and our trend line. RSI continuing to rise here, overbought still, continuing to make new relative highs along with price. The kind of situation that would suggest further bullishness. Look for that to slip below that 70. Finally, volume starts to really drop off once you get above 370 or so. Not really any clear nodes until you get down here between about 315 to 280. That's pretty far away though. More consistent trading activity below that 370 level or so.
Yeah, right now we're kind of right in that range at the 366, 367 area right now for United Health. But Don, let's take a look at your next one here. You've got an ETF for your second pick, the Emerging Markets ETF. Are you bullish or bearish here?
I'm bullish. I actually saw a nice opportunity kind of forming in here. There's a few aspects that I'll kind of bring into play in this EEM. Again, that's the Emerging Market ETF. I'll bring a few opportunities to lighten here. Number one, if you get a weakening U.S. dollar, you're likely to see some upside potential, specifically to the emerging markets. They love a nice weak dollar. But number two, and much more kind of poignant right now, is that the emerging markets look kind of ready to break out. If the emerging markets can actually hit 64, they should kind of ignite to the upside in what I kind of term a gamma squeeze. It's gamma time in here, and we're coming up near that. I mean, right now you've got the emerging markets ETF trading right around the 63 handle. So hitting that 64 is very close to the all-time high. And often what we've seen, especially lately, retail trade is looking for this. They're looking for stuff that's ready to break out. So kind of have that anticipation, if you will. You get the trade on, you wait for retail to kind of, you know, come to the aid of this and start to buy calls. They buy calls and it literally explodes the underlying to the upside. We've seen it time again. We just saw it in NVIDIA the other day, but even the emerging markets ETF has got decent enough options order flow to see one of these gamma squeezes kind of play out. This trade is relatively short term. This is May 15th expiration. Why am I actually going a little shorter term? Because this is going to happen in the here and now, and you want options that are going to move quite rapidly. So the kind of standoffish way to actually trade, if you will, one of these gamma squeezes, okay, with limited risk, is to go out and buy the 64 calls and sell the 66 calls against them. It's just a $2 wide spread. It's being done for a 65-cent debit. So again, there's not an extraordinary amount of risk. Even one contract is $65 on here, but it's kind of, when I say a standoffish way, you can put the trade on, sit back, and allow this squeeze to kind of take hold and not have to rush into it with the rest of retail trade.
All right, Rick, so as we look at the technical setup here for EEM, are you seeing potential for a gamma squeeze here as well?
Yes, and at a similar level that Don was highlighting here, I had the 6350 level highlighted. That's because that was our old high point that we saw before this rather anomalous spike to the upside, and that's about where we topped out again more recently. So an ETF focusing on China, Taiwan, South Korea, India, and Brazil mainly. Mainly also sectors that includes our tech and financial and consumer discretionary. So interesting way to get some exposure to these other areas. So now we can see though, we have drifted beyond this trend line for now. 5-day EMA in dark blue comes in near 63. Our teal 21-day monthly EMA 6150 could be a downside area to watch out for. A little bit of a drift downward in the RSI. Still around 60 though. Still more of a bullish trajectory here. So look for price to break out and for RSI to break out as well above that trend line. So now we can also see here our volume profile shows that
coming up to resistance
really
again.
starts to thin out very dramatically above 63.5 or so, and 62 is the limit to the downside. Then we see another pretty clear node between 60 to 61, 57 to 59, also some heavy activity here. So these can give you glimpses into the heavy trading concentration areas that could present a potential support if we do start to move lower. Not too much to work with to the upside though in this case.
Yeah, we're just right now, right near the base of that first node you were talking about. We're about 62.93 right now for EEM. Year to date up 14% so far. Your last pick here, GE Aerospace. Don, take us through this one.
Yeah, GE Aerospace kind of caught me a little bit off guard. It's about to retest and test into this 280 level. Now, it's had some big reactionary lows lately below 280, but I believe the 280 is literally kind of make or break. And this next time, this one is not a test. If it gets under the 280 level, then it's going to have some room to the downside, some fairly significant room to the downside, and that's exactly what my trade is designed for in this case. Look, I don't usually care whether I'm bullish or bearish, but I do enjoy my bearish trades. In this case, I'm going to go all the way out to the July 17th expiration, so let's not get too crazy. I'm going to buy an out-of-the-money spread, allow GE to possibly break below 280, and it's right there. I mean, we're right on it today, and as I said, comes through it again, and I don't think it's a test. I think it's actually, going to really push lower. So July 17th expiration, I'm going to be buying the 270 puts and selling the 260 puts against it. This one is done for a $3.05 debit. So I'm saying, if you're looking at GE right now, it's right there. It's right up against it, and I think you're going to get some pretty heavy activity if you break under that 380 level.
All right, so as we look at GE and the setup here, Rick, what are you seeing in terms of the technicals?
Right, so 280 and 270 are two of the areas that I highlighted as well. These are our green lines here. 280, old high, subsequent low, and then a bit of a chop point here. And then a double bottom near 270. So pretty much the same levels that I would be concerned about as well if I were looking at a play in this name potentially here. So gap here as well to the upside, 290, about where we halted the past couple of sessions here. Downward sloping trend line overall, gotten a bit steeper recently as well, you could argue here. So we'll have to see what happens as we head into the conclusion of this week for this name. Now, another thing that stands out here when we apply our moving averages is our 251-day EMA lines up at the same point as that 280 level. So this is a confluence that presents an even greater potential for a break to the downside if we do start to fall below it. The longer term the moving average, the more significant it is if it is breached. RSI showing a triangular setup here. We are close to breaking through our own green trend line on the RSI as well. So again, that would be more of a confirmatory view if we did start to break in terms of price and RSI in tandem. Now we can see here a volume node between about 266 to 276. That could be an area to watch for potential consolidation. If we do break through that again, around 250 is the next area of interest here. Meanwhile, to the upside, I do find it notable that we were rejected at our largest volume node, the 290 to 310 level roughly. Our point of control comes in around 299 here. So we remain below that. That's an important point for the bulls to recapture.
Yeah, right now at 281.68, so about $9 off of that range that you were just highlighting there. Don, I want to thank you for being with us for Big Three today. Really appreciate you bringing those picks to us. Don Kaufman, co-founder of Theo Trade, and thanks to Rick Ducat, our lead market technician, for always breaking down the technicals. Coming up next, we are going to spotlight AT&T after earnings with the head of investor relations. Stay with us.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Dad.
Dad.
I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution, the 2 grandchildren, planning for their college educations. Someday it'll be their turn.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech check, options corner, futures, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Oh, darn it. Okay, already.
Schwab coaching is concepts brought to life in the real world.
It's absolutely world class.
We have
What the fuck have I
coaches
done
who
here?
have been in the industry and around the industry for a long time.
We have different formats because people learn differently at different times.
We have webcasts running through YouTube all day, every trading day.
We've got events that are making their way around the country.
So you get that opportunity to share experiences and knowledge with other traders.
How incredible is that? And it's free.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
Hey, Dad. I have a question for you.
No.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with
Oh,
the
no.
journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
Welcome back to Trading 360. I'm Marley Caden, live in our Chicago headquarters. Let's check in with the markets and see how we're faring on this very big day. The FOMC meeting coming our way and some earnings from the Mag 7 names. Taking a look now, the S&P just ever so slightly in the red, pretty much
Still in here.
71.33.24. The NASDAQ up 0.2, 27,081 right now. The Dow has lost almost 300 points this morning, and the Russell 2K is down more than 0.4 at 27.43.73. The dollar is at 98.67 ever so slightly today. The 10-year ticking higher, though. We're at 4.38. Crude oil is almost $105 a barrel after breaking that $100 mark yesterday. And Bitcoin holding on at 76,585, trying not to fall back into that 75,000 and lower range that it was trapped in for weeks after it broke out just a few days ago. Now, we do have 4 of our Mag 7 names reporting today, so let's take a look at
Yeah, it's going to be a big day.
performing today. We're looking here, NVIDIA lower on the day. Right now, they're down more than 1%. Apple also lower on the day, trading about 0.7 lower. We will hear from Apple tomorrow. NVIDIA, we have to wait until May 20th. Google, we are going to get their report card today. They are trading more than 0.6 higher today. Amazon trading up about 1% at 3/4 right now. A nice day for them. Microsoft in the red, down about 1%, setting up their earnings. Meta will also hear from today. They're mostly unchanged. They're just ever so slightly in the green, trying to get up 0.1% right now. Tesla, of course, we've already heard from. They are trading down 0.5% right now. Also want to give viewers a small update.
Tesla jumped back above 272, 372.
From
Federal Reserve Chairman Jerome Powell. We'll hear from him at 2 Eastern. But we have gotten word that the Senate Banking Committee has voted 13 to 11 to advance Kevin Warsh's nomination to the Federal Reserve Chair, bringing him one step closer to potentially replacing Jerome Powell atop the central bank next month. He cleared that panel in a party line vote after they agreed to defer the Fed's investigation into the central bank headquarters renovations, thus paving the way for what will likely be Jerome Powell's last press conference later today. We'll, of course, have live coverage of that, but we will be back after a short break. Stay with us on Trading 360.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com.
And on all your favorite streaming services. Schwab Network. Available anytime, anywhere, on any device for free.
How's it going?
First base.
Sometimes, you know,
Next. Try it again.
you could have done better.
Please.
Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Nicole Petalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers,
Come on, break out for me.
interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network. Welcome to Schwab Network.
They have 9 crossover to 21.
Expert strategy.
From the opening bell to the closing bell, we've got you covered.
We got triple top.
Inside the minds of pro traders.
My point is if they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on APS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network.
AMD up to 200.
Any screen, anywhere, free. SchwabNetwork.com.
Intern, this place is incredible.
It's where I get all your office supplies.
Your golf balls, your fancy coffee,
Your giant.
Trump is playing the markets like a fiddle. Now, fiddle, I've done the fiddle analysis. I thought it was something that I made up. But a fiddle has 2 tuning pegs. You have the one at the top, then you have the adjustments at the bottom to fine tune it. That's the first time I ever seen somebody else say it. Well, didn't want to break the wall. Snake, breakout, pullback. That's some of the hail we got yesterday. North side of town by Walmart. North side of town by Walmart. So today we're called consolidating. You got a nice little setup right here. Let's see if it works out.
She'll have expanded coverage of the Fed meeting on the watch list today and will also join us on Market on Close to take a closer look at that rate decision and also whatever Jerome Powell has to say in that press conference. Now it's time for our disruptor, George Tillis, our senior markets correspondent, here to talk about Seagate today. They're having a great day after some really solid earnings that we covered on Market on Close yesterday. What can you tell us about the numbers here, George?
Is that STX?
Well, I mean, they're pretty impressive. If you think about Seagate as a traditional, data storage provider with solid-state drives and hard disk drives, it's not necessarily just that physical storage. It comes down to cloud computing. I mean, they talked about how they're expecting growth when it comes to
$20 billion
sales.
buyback program.
They're estimated to be somewhere in the mid-teens in the next few years. They actually increased
On Seagate.
4%. If you look at the cloud computing major cloud computing suppliers out there, their capex, as denoted by Seagate, is about $1.1 trillion. That's, of course, assuming the major hyperscalers spend. So there's just tremendous amounts of money being deployed for storage and edge cloud.
I don't know where they go. They're saying hyperscaler. They used to say Magnificent Seven.
Quite good. They posted $4.10, beating the estimates of $3.50 by 60 cents, and that was more than double last year's $1.90. Sales were higher by 44%, $3.11 billion.
I don't know what they're doing there.
The estimates by $150 million. And then they also increased their guidance. So for next quarter, the guidance is now $5 a share. So sequentially, just with the beat, they're adding another 90 cents to the bottom line estimate, plus around $3.5 billion in sales. So with that said, stock is moving up nicely. Based on the report, some of the analysts are still bullish. Evercore increased their target to $750, Cantor to $1,000, and Wells Fargo maintains basically a sector weighted around $700, a little bit more conservative outlook on their end.
And I'm just looking here at the top performers. I mean, Seagate is in the top 5 no matter how you slice it. If I'm looking year to date, if I'm looking the last 52 weeks, the last 52 weeks, they're up more than 700%, George. I mean, and the bar was already so high for this name, and it just blew it out of the park here. As you know that, you know the analyst consensus. We're seeing these price targets raised, reiterating these bullish sentiments here after they cleared this already sky-high bar and now 14% higher on the day. How would you look at trading a name like this, knowing it's had that meteoric move to the upside, but I also know that you don't like to go against the trend?
Well, that's the thing. So the trends in stocks follow what's going on in earnings, and earnings estimates keep moving higher, and so price is moving higher. I think today is a little bit of a different day in terms of what we're expecting because of the Fed meeting. So we're sort of in a holding pattern, I think, in the markets. You can kind of see that in Seagate's price action after it's coming off the highs. The low stays around 650, but nonetheless, the trends are still very positive. Now, the challenge is the price of the stock is very expensive. If you were to go out and buy the 650 call option outright, it would cost you basically $50 a share, 5,000 a contract. So in lieu of that, what I'm going to do is I'm going to structure a long synthetic combo. I'm basically going to buy the May 16-day expiration 650 call, but I'm also going to sell the 650 put to help finance that. So altogether, this would cost you about $15 a share, or $1,500 a contract, much less than just buying the 650 call outright. So you're still going to participate in the movement higher from 650 or higher, and you have to consider break even as at 665, but there's no free lunch. So when you structure this trade, you're selling the 650 put. And by doing that, again, your break even is 665 if you're assigned the shares, and that means your risk is all the way down to zero. So you're basically structuring a trade much like you're buying 100 shares of stock, but it's costing you $15 instead. And so again, you have to consider the reward is unlimited, break even 665 in the next 16 days, but your risk is essentially structured just like if you were owning 100 shares.
All right, well, with Seagate, we are at 14+% today. We're trading at 662.31 on the backs of those earnings. George, really appreciate you breaking those down for us. I'll see you a little bit later on Market on Close for the Mag 4 earnings that we're getting today. But coming up next, we've got our 360 round expectations for the Fed ahead of today's decision, what we might hear from Powell, and an update on Kevin Warsh. That's all next on Trading 360.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including
pot stocks dropped again.
Studies. Tailor the platforms to your unique needs with nearly endless.
Just don't hold up anymore.
And track market trends with up-to-the-minute news and insights.
Coffee.
Not like they used to.
This is Next Gen Investing, where we track the trends shaping tomorrow's market.
I got the Fibonacci's.
Energy, crypto to consumer, we focus on what's
Seagate.
driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
That could certainly be a short to near-term catalyst
Next on Investing, 1 p.m. Eastern.
Only on Schwab Network.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with.
Your family is disgusting.
Today, Dana Peterson, Chief Economist at the Conference Board, and Brandon Pizzurro, the President and CIO at Guidestone Capital Management. Thank you both for being with us. Dana, let's start with you here. What are your expectations for today, both from the decision and then what we might hear from Jerome Powell in the press conference?
I think the decision is pretty clear. The Fed's going to remain on hold. However, we may see more language about the risks to the downside to the economy because of these inflation shocks. Not only are gasoline prices rising, but these costs for oil are flowing through supply chains, and they're going to show up in things like goods and services even months from now. And so I think the Fed is pleased to just kind of stay on the sidelines and not consider any interest rate cuts for this year. Regarding what we'll hear from Chair Powell, that's what everyone's going to be wondering, since we don't have an SCB to talk about. And I know prediction markets are saying that he may leave, he may also stay. And I think his greater concern is about financial stability and making sure that there is a smooth and orderly transition from his chairmanship to the very likely chairmanship of former Governor Warsh.
And Brandon, what's your expectation today? Do you see any possibility that we get a surprise here?
Good morning. Yeah, unlikely that we're
Yeah, I got a little bit of
basically baked in a hole. I completely agree with Dana. It seems unlikely that they would do something like that. But what we're going to be watching for is really reading those tea leaves, as we like to do. You know, what's the temperature overall for potential rate hikes or even rate cuts into the future? What's the rest of the year hold for us? Obviously, whether or not Powell stays on is a big question mark for everyone. But also talking about how some of the labor markets turned just a slight bit up in positive territory more recently. Also, last but not least, certainly what type of inflation impact we might be seeing as a fallout from the Middle East tensions.
Yeah, and Dana, as far as what we're expecting from Powell, you know, how much are the markets going to price in his commentary and really react to it, knowing that it's looking like we will have a new Fed chair at the next meeting? So how much does it really matter what he says here in terms of inflation? We know when your inflation expectations jumped to about 4.8% in the most recent Michigan data, and Brandon just highlighted that we might have some emerging cracks in the labor market, but how much does that commentary actually matter if he isn't going to be at the helm at the next meeting?
Well, Chair Powell is certainly
That's a stupid question.
A powerful member of
Marley.
the board, but they are also the spokesperson for all the other board
Well,
members.
his chick's glasses.
And certainly for the FOMC in general, which includes not only board members but also bank presidents. So he's going to present something that I think we should listen to, because he's speaking on behalf of all the folks who vote. And
You got a narrow face, baby. What are you doing with them kind of glasses on?
for the most part is that the Fed still does not know whether or not this is going to be a transitory shock or something more permanent that's going to significantly reduce demand and consequently reduce business investment.
Well, so far we're in a bear market. Making things tank. We're definitely at support right now. We're definitely at support. That has to hold. 71735. One trade at a time. Sweet Jesus. AMD has 3 black crows with a triple bottom. No, that's a CRM. Salesforce. PLTR hit my solid support this morning. A little bit under 185 that I had. We hit 168. Trump rejects Iran's offer, says blockade stays until nuclear deal. AMD's been holding the 200 for 27 minutes. 5, 10, 15, 20, 25, almost 30.
powerful option strategies for Amazon. It's got earnings due after the bell. Plus, the team from Likefolio will be along with new sentiment data on Alphabet, Google, and Microsoft is also on our radar today ahead of its earnings. Now that we've got the roadmap for today's trading action, it's time to bring in my co-hosts. You've got Tom White in our Chicago studio and Kevin Hinks joining us live from the Seaboat. As you know, we've got you covered from exchange to exchange and beyond. All right, guys, Wall Street holding the line ahead of the Fed decision. And those results from big tech, and this even as oil shoots higher once again. When I talk to some of the guys on the floor, Tom, they are surprised by how, I guess, resilient this equity market is.
You like medium roast or dark roast coffee?
$106 a barrel right now. Your take, Tom?
Yeah, I think that bar has been pushed higher as crude oil has kind of, hovered in those mid-90 levels. Now we're pushing back over the $100 a barrel level. And now you're hearing, a lot of economists coming out and saying, no, there's not going to be much pain until we hit $150 to $175 a barrel. So we've kind of discounted the negative impact that rising crude oil prices have on the equity market. Now, you know what? We're down about 0.2% here for the S&P 500. We're just off of record highs for that and the NASDAQ 100. But if you look in depth a little bit in the S&P 500, out of all of those names, there's only 47% of those stocks above their 50-day simple moving average. Typically, when you have the benchmark index at record highs or near record highs, that number is going to be a lot bigger. So that gap between the number of stocks that are above their 50-day moving average versus where the actual index is has really widened out. So there's a few big names, a few big sectors that are really driving most of the gains in here. Here's the chart that we have on the percent of companies above their 50-day simple moving average. It's about 48% right now. So that's actually low compared to if you look at the S&P 500 on a one-year chart where we've got stocks basically at or near highs here. So I like to look at some of those metrics when kind of figuring how wide is the breadth on this rally that we've seen, the strength that we've seen. And I think we'll find out a lot later today, with for the Bank 7 names reporting and the FOMC meeting, if we're going to hold these gains and which one diverges a little bit. Do we sell off a little bit in the equity market, or do we start playing catch up with maybe some of the other maybe 400 names that haven't participated in the rally as much as maybe the 50 or 100 that are leading us?
Kevin, are you bothered at all by $106 oil?
I'm not happy about it, but as a trader, I feel like I'm waiting for some headline that's going to turn crude oil lower.
Yeah, what would it be?
I'm not getting it. Matter of fact, the rhetoric is getting more heated. Now, we don't know what's going on behind the scenes. They could be negotiating, and I think they are negotiating, but the headlines coming from both sides are not toning down the rhetoric whatsoever. So crude oil that is breaking now through $106 doesn't seem to be backing off. But as you know, we're one news headline away from a 180 on all these. So it's frustrating, but you wait. And you wait for when this happens, and you control your risk, and you wait for the move to happen. But yeah, crude oil has been very frustrating since it looked like the surge was over and it was working its way back lower. But remember, you're dealing with Iran, and Iran is not a friendly player in this whole thing. So yeah, crude oil is going to be like this until it isn't, frankly, Diane. This market today, I'm struggling because I think we're stuck. And what do I mean by that? If these 4 hyperscalers come out today and talk about massive CapEx raise, right? They will all sell off on that news. I don't know that for sure, but I think they will because they did last quarter on CapEx news. Now, that might be good for NVIDIA, Broadcom, and AMD. But what if they come down and trim or flatten or control spending on CapEx? That might be really great for all these 4 names but NVIDIA, AMD, and Broadcom may sell off on that. So I'm not sure how this market's going to play out. I'm going to be watching it very closely as it does, but this is going to be a little tricky because I think everything is focusing on CapEx spending, and we're going to talk about Amazon in a minute. They've got a little different scenario, but I think it's CapEx spending is what we're going to be talking about tomorrow morning, Diane and Tom.
Okay, great point there. And, you know, a couple of the headlines that I know that we've been across, according to Axios, President Trump saying
Always clean
that
this gym.
Iran will remain under naval blockade. They've rejected Iran's proposal to open the Strait of Hormuz under
Hello, my name is Darren with Educator. How are you doing today?
So
Oh, I'm real busy right now.
And we know that there's been economic pressure.
You know, Western Digital, SanDisk,
go, baby.
Upfront in this space, and some of the other, names.
I gotta get my money back here. Come on.
You know, you see these parabolic moves, guys, in stocks. You know, on a year-over-year basis, or even a month-over-month basis, and you kind of start scratching your head. But that E part of the PE continues to expand and grow, and they're not seeing any slowdown in orders. So maybe the cyclicality that we typically see in some of these storage and memory stocks isn't going to come to fruition. A lot of people are predicting that demand's going to outstrip supply through 2030 at this point, and that would be only a bonus because the earnings for Seagate were a lot better than expected, beat and raise quarter, and best margins that they've ever had, and their AI data center revenue continues to expand above what the street expected.
Listen, Tom, I didn't think it could get any better for it because I was like, this stock has already had a massive run when you think about this year, last year, and it just continues. Kevin, your take on Seagate or NXP? I mean, that's up more than 20% right now.
You know, Seagate, Seagate's the one we talked about yesterday, and everything was positive except the valuation and how far the stock had run. So this is what happens when a high bar gets met with unbelievably great numbers, right? You can hold an earnings with a chart that looks like Seagate with a high bar as long as you beat and raise on all those. Listen, I think overnight we had really good solid numbers. You guys were focusing on Seagate. I was focusing on Starbucks and Visa that put up great numbers. Starbucks up 9%. And this is a company that there was a lot of doubters about going into this. And that Brian Niccol, remember we talked about the competition was hurting Starbucks yesterday. Well, this turnaround is real. Brian Niccol has got this company on the right path. I think it was really impressive to see some of the numbers that he put up and the turnaround and the same store sales up 6.2%. Those are old school Starbucks numbers. Visa just a showing that the U.S. consumer, an employed U.S. consumer, is still out there spending in Visa. Some of the numbers that they put up, I mean, 11 billion, 17% year-over-year increase in revenue in Visa. That's just, remember, that's not balances like American Express. That's just swiping cards, and they make money off the number of transactions. And so for that to jump back like that, really strong day for Visa. Starbucks, I mean, we're getting, other than the risks from crude oil and geopolitics, this market, this economy, showing a really strong day here in economic data, in earnings. It's pretty incredible the day we're having, other than the risks in some of the market from, you know, like geopolitics and commodities being higher. Pretty incredible.
Which the market seems numb to that, or at least shaking it off. Tom, this reminds me of that Mark Twain phrase, but I'm going to say it this way. Reports of the demise of the consumer are greatly exaggerated. Your take on Visa and or Starbucks? I mean, Visa, really strong performance, and what a recovery in the stock today.
Yeah, and what Warren Buffett has always said, dare to bet against the U.S. consumer, because these numbers were better than expected, a lot better than expected. And you're seeing that they're seeing no negative impact from the conflict in the Middle East, right? So that's a positive. But Kevin mentioned Starbucks on the 6.2% comparable sales growth. They expected that to be about 4%. So the turn in the turnaround story of Starbucks is finally rewarding some investors that have been waiting for this. It's been a 2-year slog for this company, so they're starting to see that. They raised guidance moving forward. That's a positive. Also, they're starting to see average ticket prices go up a little bit. So this is a positive because, investors in Starbucks over the last couple of years have been taking it on the chin. And we noticed from the Lifefolio data that we saw from Starbucks that, hey, the competitive pressures were coming down the pipeline, especially from Dutch Brothers and others. But I think it's more about the resiliency of the consumer. You look at the Visa, this was the cleanest quarter from Visa in a decade, maybe, if you look at it. Shares jumped the most today in 4 years for this company. Asset-light model, implied volatility wasn't really elevated going into this report. They just kind of, weren't bidding up maybe the option premium in here, but to see it move like that, it kind of shows that resiliency of the consumer. And you know what? Maybe it's being driven by this K-shaped economy that we continue to talk about, but at the same time, if that consumer is still spending, that's going to be a benefit for these companies. And I think the key here is looking forward that, hey, even if this conflict gets extended, it hasn't had a negative impact so far, but that's a positive that we can maybe, ride this out if it does get extended a little bit. But I think, you look at a couple of these names, Starbucks, Visa, they're the top of the food chain as far as, maybe brand awareness. We'll start getting into more of the retailers in a couple of weeks on their earnings. We'll see what they say. Maybe the specialty retailers won't be doing as well. Maybe the discount retailers won't be doing as well. But right now, it's a good start, and it extends what we've seen so far in earnings season, which has been blowout numbers.
All right, quick thought on the Fed. We know they're expected to leave rates unchanged. We also got the microscope on the top spot at the Fed. Kevin, your thoughts?
Well, the announcement by the Fed today at 2 p.m. Eastern is not going to be the news story of the day, that's for sure. We don't say 100%, we don't say 0, but there's a very low probability that they're going to move on rates. It's pretty close to 0. Now,
oh, really?
That's not the fun part of the day. The fun part, the must-see TV part of this day, will be Jerome Powell's press conference. And does he become nostalgic? Does he stay on course and talk about the economy? Does he talk about his future? Does he talk about other things besides full employment and inflation? And so the fact that Kevin Warsh got
okay, I got to figure out how to.
Senate Banking Committee, it'll go to the full Senate probably next week.
Oh, there we go.
The deadline is May 15th, so it'll be done by then. But it'll be
S&P 500
next week.
snake breakout. Green machine.
Battle, I think, and it'll be real interesting to watch how Jerome Powell finishes. And then does he finish? Does he take a seat on the FOMC or does he leave? I don't know if he'll announce that today. He certainly doesn't. it wouldn't be in his normal routine to talk about something outside full employment and inflation. So I think it's going to be must-see TV. The markets will certainly react, although there's no dot plot.
No, I didn't miss it.
Move on interest rates. It's going to be all Jerome Powell's press conference and how he sees things going on in the future. I think it's one to watch, that's for sure. Jerome Powell's legacy will be mostly good, but at the end of the day, you know, that word transitory is going to be stapled to him for the rest of his career. Diane?
We've hit a solid support.
Yeah, I saw the interview today, this morning with Nicole Petalides and Diane DiMartino.
A double bottom down here I called out.
The Fed should be cutting rates.
With the 85, 285.
He's going to look at, the Fed and the data maybe in a different prism than Fed Chair Powell did. And that's going to be maybe a benefit. I mean, there's no expectations for a rate cut. We know that. There's really about an 85% chance that we're not going to get a rate cut through the
Tom, you're so
Is the market
negative.
priced in rate cuts? That's going to be a concern, I think, for the equity market. But yeah, Warsh getting confirmed today by the Senate Banking Committee, positive on that front, and perhaps
The Pow trade.
through 2028 in January of 2028 because he has the right to. We'll have to wait and see on that. But yeah, it'll be a press conference to watch today.
Indeed. I don't know if there will be fireworks, but certainly one to watch. We've got Bull versus Bear coming up. The guys will get their example trades put together for Amazon. It's got earnings due after the bell today. We will have more Fast Market after this break.
Do. Do. 711735 is my solid support. As we come back down, Jimmy's thinking about another scalp trade. It's 11:18 right now. The air conditioner guy hasn't called and talked to me yet.
This place is incredible.
It's where I get all your office supplies.
Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, Schwab, they can do everything. Invest, trade, get full service wealth management, and anything in between. I think I'm gonna be sick. We have to buy that now. Schwab.
Invest your way with Schwab.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals.
Okay, get ready,
shaping markets
Bobo.
in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
Get ready.
Welcome back to Fast Market here on Schwab Network. A big day for big tech with most of the Mag 7 reporting after the bell today. Among them, Amazon is set to release its quarterly report card. Analysts are expecting the e-commerce giant to report earnings of $1.60 per share on an adjusted basis. Revenue is projected to top $177.8 billion, which would be up from the same time a year ago. Shares have been on a major upswing over the past month, and Amazon is up 14% year to date and 40% year over year. But investors will closely scrutinize CapEx. You may remember the stock sold off on the last report as Wall Street grew skittish over big spending plans. Time now for the tug of war on Amazon. For that, let's welcome back in our co-hosts Tom White and Kevin Haynes. It is bull versus bear time. All right, before we get to your example trades, gotta get your thoughts on Amazon. I wish for this that we had like a real rope to do the tug of war, although you all are in two different places. But Kevin, I'll start with you. What's your take on Amazon?
A long rope. If we had to do a tug of war, that would be a good one. But when I look at Amazon, all the underachievement from last quarter, the capex numbers that scared the street, the stock got into right around $200. Well, that's all back now. Historically, this stock has struggled in the mid 250s, mid to high 250s. It's through that now and now to all-time highs. But remember something. This company is spending $200 billion on AI, on capex spending on AI.
Do you have a problem with that?
It's got to show, so far it's been like $15 billion in revenue. The consensus is for like $36.8 billion in revenue from AI services. They've got to really beat that number. They've got to start monetizing AI, and I think the capex number is going to be big, but they've got to start impressing with the revenue from AI. The revenue, the overall number is going to be great because of e-commerce. They're a leader in e-commerce. They're a leader in streaming. Not number one. We're going to talk about the number one in a moment, but they're into so many things that, obviously AWS grew 24%. Is that enough to keep the stock going? Because Google Alphabet's growing more in their cloud. So the comparisons here, it's not as cheap as Google Alphabet. And some of their numbers aren't growing as fast, but they're still putting up gargantuan, whole entire country like numbers in terms of revenue. So I think, the bar was low. Now the last 3 weeks, now the bar's very high for Amazon. So I think they can't just match the numbers. They got to beat them now because the bar is high. But what did Seagate show us? That can be done.
That's a good point. Tom, your take on Amazon?
Well, I think, maybe the market's getting a little bit ahead of itself. I mean, the stock's up, 25% so far this month alone, hit an all-time high in today's session. And this is based on the fact that, they've got multiple levers to pull as far as revenue generation. Now, let's walk through them. AWS grew at 24%. That was a re-acceleration as far
It's not
as
much movement
growth.
today.
That's expected to be
Not like it was this
25%.
morning.
What if it comes in at 26, 27%? That's going to be a benefit, right? The conflict, rising oil prices is probably going to dent the retail side of their business. But then, you look at advertising, that's supposed to grow 21%. Remember, that was over $50 billion worth of revenue just last year. That's supposed to continue to increase at over a 20% clip on a year-over-year basis. That's a positive. They've got their own chips, right, that they're using. In AWS, as far as the capacity that they have, they can keep on adding capacity as far as energy needed, but at the same time, their capacity constraints. Andy Jassy does a good job as far as their expenses goes. But
$2.10. I'm gonna move these up.
And out of the
$71.50
that all these hyperscalers are spending, the 4 or 5 of them that are spending, $200 billion was their estimate for 2026. If that number continues to rise when the stock's at these all-time highs and overbought on a technical basis, watch out, because I think
Watch
the
what?
doesn't want to hear continued increases. Even if they just come in and don't raise that estimate as far as capex spend, that would probably be a benefit for the stock.
All right, let's get into the example trades. Kevin, let's start out with yours. What's your approach today?
So I went out to the May 1st, which is obviously Friday of this week, and I looked at the expected move, and the expected move for the end of the week is $19. And so I kept it relatively fundamental here, and since the stock is overbought, since the stock has run so much, I sold the 280, 290 call vertical. And like I said, May 1st expiration, I collected about $2.15. It's a little lower than that now, as the stock seems to have backed off here a little bit. But it was $2.15. If you sell it at $2 or $2.15, that's the most you can make. Whatever credit you take in is your max profit on this trade. The risk is the difference between the $10 strikes and whatever credit you take in. That's the risk on this trade. But it's a high probability short call vertical that's above the market. It would be a significant all-time high if it were to get up there. And so my saying is a little bit too far, a little too fast. Even if it goes up, I don't know if it'll breach 280. So just a short call vertical, Tom. It's a high probability, it's collecting theta, and of course, as always, it's risk defined.
Yeah, let's take a look at this one. And I think Kevin priced this one out, this example trade, when the stock was at or near those all-time highs. We pulled back relatively about $3.5, $4 from those all-time highs just in the last hour and a half or so. So take that into consideration. But passive, short, neutral to bearish call vertical here that gives you a better probability of success on Kevin's example. May 1st weekly options that expire in just a couple days here on Friday at the close. Selling the 280 call, buying the 290 call, short $10 wide. Collecting roughly, we get 215 credits. Kevin mentioned probably trading $1.70 right now, but the collecting might be less now because the probabilities are higher. Right now, the probability that that short 280 strike that you're selling in this strategy is out of the money at expiration, 78% at this point. So you got a higher probability of success. If you you've got $785 in risk on that. If you collect 215, and it takes the break even up to 280, 215 to the upside. So passive, high probability. So even if you're wrong and the stock goes higher but remains below that break even at 280, 215, you could potentially be profitable. Really short-term positioning, taking advantage of the higher implied volatility in the option market. Pricing in probably over the next couple of days, it's $19 in either direction here. So you've got some cushion to the upside on Kevin's passive strategy. So I looked at something, Kev, a little bit different. I call this a Kev special. It's a complex trade, 4 legs on this one, where I combine 2 strategies to create an initial credit on this strategy that's basically neutral to bullish on this, Kev. Let's walk through it. First, in the May 1st weekly options that expire on Friday, we're going to sell it out of the money put vertical. We're going to sell the 250 put, buy the 245 put. Short $5 wide, neutral to bullish put vertical.
Always clean as Jim.
With a 1 week wide.
Good morning, my name is Julia. I am just checking something as per our records from your local county in the state of Missouri, and this will be quick. So you are currently enrolled in Medicare Part A and B, correct?
Yep.
Selling that same 280 call in the May 1st weekly options that expire in 2 days.
What else, baby?
Net package, we've got a credit of 50 cents that you can collect on this strategy. So that means it would take your break even on this one down to $249.50 to the downside. You might be able to collect a little bit more on that, maybe 80 cents right now because the stock has moved down a little bit. But you can look at the risk profile here, Kev, and kind of get the idea that, hey, yeah, you want it to go at or near 280 because if you're bullish, right? But at the same time, if the stock just kind of gyrates here, because you're collecting a credit on this, and you still have that calendar, you're going to still be profitable all the way below, just below the 250 level at this point.
Yeah, so choosing your direction and then putting on a strategy for as inexpensive as you can, using the short put vertical to finance the long call calendar is what Tom has done here. And so he's got a long call calendar on with a bullish posture for a net credit because...
Okay, we got a right shoulder here, finally. Finally something.
The debit that you would have paid...
Okay, prepare ye. Randy, I'm going for the 7150s at $3. Right there. Bingo. I'm in. Double bottom. The crowd's going wild here at the sports arena. As Washboardjim calls out this trade. These are the 7150s lotto for $3. Everybody's going crazy at the sports arena. My other trade didn't work out too well. Go away, little girl. 71-17, Jimmy called it. I waited for it. Well, I jumped in the 7150s today. My old friend Pow Pow will be speaking today. We just got a new load. Well, the SPX calls, I'm scalping the lotto. Strike 7150. My first entry was at $3. Please hold the bottom. I'm gonna turn this trade into a waltz. Hold this support, please. Come on, baby. You cannot do this to me again. It's doing it. Oh, God, stop it. Well, I'll give it a few more minutes. AMD's out of resistance. Darn it. They're speaking that weird language again. I went out there one day and I said, "What's he saying? Don't sound too good." They kind of talk like they're yelling at each other. Today it's a lot more nicer though. No, I'm down $50. Arriba. 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 Don't sound like Mexican talk that I can understand. Hola. Arriba. Punta. Uno. Dos. Tres. Cuatro. Seis. Siete. I'll take 7 of them. Siete. Arriba. Cuatros. Cinco. Seis. Oh, so I was short of the triple bottom. I'm back to $2.85 right now. I'm down $15. I'm only down $10. That really sucks. Make that a $20 bill. Can we break the 21 and have a little fun? Let's climb that hill. I'm even. I'm now even. I need like 50 cents. Jim, you're up $10 a contract. Have you ever thought about selling? No. I think he said just past the joint. Oh gosh, this is going to be a long day. Arriba. Jim, you're up $30 with your $900 investment. Now you're down to nothing. Have you ever thought about changing your underwear? Maybe that could be it. Well, the prison guy's on.
Investor expectations, I think they can. What's the reaction on on how the outlook looks going forward, and where does that compare to what everyone?
I want this man drug tested, please.
Question. I think the stock price is telling us, hey, the bar's really high, and then our data is saying, hey, they're doing really well, and so right now. With us, the math
You were pumping Spotify the other day too, buddy.
We're slightly bullish. 20s are cut off. So you could talk me into a neutral play. You could talk me into a bullish play. I think bullish is the way to go. But yeah, it's all about that investor expectation being so high, which is shown by the price.
That is Landon Swan, co-founder of Likefolio, with the latest data on Alphabet Google ahead of its results. Now, for the trading perspective, let's bring Kevin back in the fold. Tom, your thoughts before you guys jump into the example trade. Final thoughts.
Yeah, I think with the stock, the way that it has gone, even Landon, their data is all positive, right? But there's always that little crack there in, the skepticism, just because the stock's run up so far, so fast.
Yep.
And it's getting close to overbought. Now they have the different levers, right? They've got YouTube advertising.
He knows what it means.
They've got the cloud, which is growing at a
That's
fast
why.
pace.
Sometimes when I'm listening to CNBC, they say the 52-week, or they say the yearly high. I've caught them off before, because sometimes they mean like at the beginning of the year high, and it's not really a yearly high. So, what was I getting at? Oh, yes. So when I'm looking at a stock, I want to see if it's run up too fast, like he just said. Sometimes when they run up too fast, they're bound to pull back. So when you get them big breakouts every day, I'd hardly ever chase them. I wait for the 50% or the 38.2% or whatever it is pullback before I think about taking the trade. I like the 50%. Jim, you're up $30. You're up $10 a contract. Have you ever thought about selling? No. Today's lesson on Poop to Learn. I already did the eyes adjust constantly. I didn't check it off. Now this one you probably didn't know. Poop to Learn. Bones respond to sound. Not just ears detect sound, bones can too. This is called bone conduction. It is how some hearing aids work. Even Beethoven, who lost his hearing, placed a metal rod between the piano and his jawbone so that he could feel the music vibrations. Your skeleton is more acoustically aware than you might expect. Bones respond to sound. Poop and learn. One more. Fat is a complex organ. I'm up $20 a contract. James, have you ever thought about selling? No. You're up $90. You're up $30 a contract. Have you ever thought about selling? Maybe. Fat is a complex organ. Body fat is not just a storage. It releases hormones, communicates with your brain, and plays a role in immunity. Scientists now discover it an active endocrine organ. Where fat is stored matters too. Abnormal fat behaves differently than fat under the skin. Fat is a complex organ. Come on, baby. Give me a big old dollar. We got the 9 touching the 21. God darn it. I get sick and tired of this not moving. Jim, you could go buy a meal tonight with your $60, but I got to pay tax on it. So it might be about 35 or 40. Heck. I think I'm gonna, oh, now I'm up 30. I'm free to go get my cider made.
Microsoft has made some recovery.
George, I got to see George's other side of his face. Look at there.
How do you break this one down?
Shit.
Well, this will be interesting. I think there's a few things we have to consider. One is Azure growth. The estimates are actually quite high.
I'm up $120 now. We're up $40 a contract. Randy. Did Randy take the trade? Randy. You were biddy? Well, good, because it just dropped back down to 310. I was at 340 a minute. George. We've got a bullish flag. It wouldn't hurt for it to break out to 71.25. I didn't take a shower this morning, folks. I just went into the sink and got my hair wet. I'm thinking about taking a shower after this trade. Now we're breaking the 63. We got little by little. I'm going to hold it. I want to see if I can get $100 a contract. And I'll make up for my loss. I wanted to break this line. Not yet. The 63, not yet. We need a body above it. Then I'll know for sure. We had the 9 cross the 21. But what I need is I need some support. The 63 has been a resistance. Green machine. I'm either going to take my vacation in July or I'm going to take it in September. Oh, God. Come on. It's a toughie today. We had 3 white soldiers. So I'm kind of, oh, no. Thinking that could be a leading indicator for the breakout. I'm back to even. Just like that. 120 to 0. I'm gonna go get me some cider. I gotta play a country song. Get this market kicking here. Boop, boop. I'm back to $3. No. Shit. Okay, here's the right shoulder. This is what I was looking for. Stay in your trait, James. Oh, here's one. A racist song.
Mazda. Mazda.
Juice man.
Take a ride. I'm even. I recommend you don't. A little bit too much right now. I like that song though. Try that in a small town. See what happens. Oh, Google looks sexy right there. Triple bottom on Google. Damn, come on, man. We got the right shoulder with a big old hammer. Try that in smoke. That's a hard song to sing too. How'd I get a double bottom out of it? Oh, just out of that. I beg you don't. No, don't, no. Stay. Ugh. Well, shit. It is now noon in Missouri. Ice storm cleanup is in process. They were spray washing the building here so they could repaint it. Yesterday. I'm down $75 on my trade. Man, that looks so sexy right there. Google does. Oh, God. That shocked me. Hello, always clean.
Hi, James. This is Lindsay Cherry.
All right. How you doing?
I'm good. How are you doing?
Very good.
Good. Good to hear that.
I'm sorry to hear about your loss.
Thank you very much.
Yep.
Yeah, we were traveling to Honduras this past week to go to my grandma's funeral.
Yep.
She was 95, so it was more of a celebration of life. So we were really glad to be able to go, but it was a sad event, you know.
Well, I want to talk about that Medicare Advantage from cops.
Yeah, absolutely.
Unless you had a better plan. That didn't cost much. That didn't cost any money.
Okay, all right, gotcha. So, the Cox plan is a $0 per month plan. It doesn't cost anything per month.
Yeah.
And actually, the majority of the plans that I offer are $0 per month.
Yeah.
But the difference between them are going to be the copays that you pay whenever you go to the doctor or like your prescription costs.
Yeah.
So that's kind of where I
just feel like I'm getting older and weaker. That's about it. And I have high blood pressure.
High blood pressure. Okay.
And that's kind of controlled with medication, but I don't like taking it very much.
I can understand that. My mom's the same way, but does the blood pressure medicine kind of make you feel a little funny?
Yeah, it does. Sometimes it dries up my mouth and kind of makes my throat a little sore. But I'm not too much overweight or anything like that. And I wanted to, so I got on plan part A and B back in February, the beginning of February 2026. Does that still give me more time to think about it?
It does. So whenever you first turn 65, they give you 7 months. So the first 3 months before your birthday,
Yeah.
the month of your birthday in February, and then 3 months after your birthday. So we're right still in that time frame where you can decide on a new Medicare Advantage plan.
Yeah.
Since you've already signed up for Part A and Part B, that is the first step that you would need to take in order to join something like this.
Yeah.
And as I'm sure you've seen, Medicare Part A and B by itself will only pay 80%, and you're responsible for the other 20%, if that's the only thing you're doing. So Medicare Advantage plans, what they do is they work with the federal government, and they take your Medicare Part A and Part B, and then they just add to it. So they would cover the other percentage, and your portion would only be a smaller copay.
Yeah.
Up to a certain limit. They also give you a maximum out of pocket. So if something catastrophic were to happen, you know that this is the highest amount that you would have to pay before the plan starts covering for 100%.
Yeah. I noticed here lately, I don't want to see my doctor about it, but I notice every once in a while when I get into want to have some sweets and sugar, my legs start to swell up a little bit. So I think that. And I had a hepatitis C back a long time ago when that got cured.
Whenever you eat sweets, do you think maybe your blood sugar is getting high?
Yeah.
I see. Okay. Yeah, that would definitely be something that they could take a look at. And getting under a Medicare Advantage plan, that would help with doctor visits, and especially if they were to put you on any diabetic medication, it would help out a whole lot with your diabetic medication. So that would be what we'll definitely take a look at.
Yeah, that's the only thing I'm really worried about.
Sure, yeah, I can understand. So what medications are you on at the moment? You said high blood pressure?
Yeah, I thought you see what it was. It's called Linsinopril, Lisinopral.
Okay, yeah, there we go. That one is a pretty common one. Is that under 10 milligrams?
Yeah. 10/10.5 milligrams. 12.5. 10/12.5.
Is it Lisinopral
Give me a second here. I might have her in my file. B-R-A-N-H-A-M.
Okay.
B-R-A-N-H-A-M.
Perfect. Yep, she pulled right up. I was just spelling her name wrong.
Yeah.
Lauren, right? Lauren
Yeah.
Brosnan?
Yeah.
Okay. Alright, so I'm applying her. And so between those two medicines, that's gonna sort everything for me. It'll have me take a look and see which one would be the best for you.
Yes, ma'am.
And so my program pulls up the lowest cost prescription first, lowest cost and lowest premium this year. And so the first two plans that it pulled up are Humana plans.
Yep.
And those two plans I've completely zeroed out because one of them has a $350 deductible for medical. And then the other one has a $500 deductible for medical. So I'm throwing both of those out. Because the next one, third one, is the Cox Health plan. And this one covers your prescription at $0 for the rest of the year. And it also has a $0 monthly cost for this plan. And it has a $0 health and drug deductible, which is the only plan in this entire area that has a $0 drug deductible, which was perfect for you. And this one, of course, covers your doctors, which uses the Cox network, so it's absolutely covered, as well as any other doctor that you have in the Cox network. This plan also covers doctors from Washington University and Norwich Jewish Hospital in St. Louis, as well as CMH over in the Buffalo area. So you can see
I got copy of all of these. I thought we did. Just listed. I can look real fast. I might have filed it too.
Okay.
Let me see. Medicare. Yeah, you might have sent me something here.
Okay, alright, perfect. So, normally whenever I'm reviewing plans, I'll kind of go through the plan benefits, prescription drug benefit, and the extra benefits that are on the plan.
Yeah.
So, before I get started, are you looking to go ahead and enroll today so that it's the May 1st effective?
Yeah.
Okay, alright, wonderful. Then I'll be able to follow along if you are now looking at the summary benefits here, and I'm right on page 3. Alright, wonderful.
Give me just 1 second so I turn on my computer thing.
Of course.
I'll be right back. I'm still in them, and I'm busy right now, so I'm going to turn on the...
As the
most upside potential. The spending, you and I were talking about this earlier this morning.
Nvidia.
It's spending a lot, and it's wiped out a lot of its free cash flow. So you need to see the monetization there. We say that every quarter, but it's because they don't have the cloud business like the others. So I think that's why everyone's looking at better on that metric as well, Alex.
Yeah, I tend to agree. I think it's the contrast between Apple and Meta that has my attention. I just want to see what the street does with the numbers. What are we rewarding this quarter? Because it's crunch time now. Like this is the big game now. We're no longer in practice in the preseason. We're here now with these big tech earnings. But Sam, always appreciate it. Looking forward to breaking some of these at the bell later on this afternoon on Market on Close. We're going to take a short break. We get back, and it's time for Chartmaster. Rick Ducat will stop by, and we're going to look at Meta. We'll also look at Qualcomm as well. We'll be right back.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Intern, this place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, at Schwab, they can do everything. Invest, trade, get full service wealth management, and anything in between. I think I'm gonna be sick. We have to buy that now. Schwab.
Invest your way with Schwab.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Welcome back to Next Gen Investing. I'm Alex Coffey alongside the Chartmaster himself, Rick Ducat. He's, of course, lead market technician for the Schwab Network, and he's going to help us preview a couple earnings that we get after the close. Meta, Qualcomm. I mean, these are two big-time tech firms, and they're not even in the top three in terms of the biggest companies after the close. That's how big this afternoon is. So let's talk some Meta here first as we look at it. Down on the session, but I mean, I don't know if that tells the full story or not. You tell me.
A pretty decent recovery from the lows, up 29, almost 29% from this low point that we hit, 520.26. A very steep, sharp, upward sloping trend line here in white has given way to more sideways price activity though. Now we can see the 680 level around where we topped out recently was a high point previously, the high point after a gap down, and a notable low point here. So we paused at an inflection point heading into earnings. If we were to keep moving to the upside, another notable intraday high comes in right around there at 710. Another gap could be filled here near 741 that also matches a high point as well.
Can't help but notice too that level coming into play basically around earnings seemingly every time. So it's not a unique situation that we're in here going into this one.
Yeah, good observation. These can be these kind of sticky price levels that keep coming back into focus over and over again. But now to look at the downside, 653, recent relative lows, another gap here near about 620, and then another low point here near about 600. A little bit murkier to the downside here in this case. So we'll have to wait and see how things develop. Our moving averages that we follow, sideways sideways consolidation. We are close to our 5-day EMA in dark blue, 671.66. But we have a bit of a confluence to the downside. Our other three pretty close together, most notably our long-term 251 yearly EMA in orange coming in at 648. Momentum trailing off somewhat as we head into earnings. Pretty common situation, but still relatively high, just below 60. Finally, our volume profile. This shows our heavy trading activity by the blue histogram on the right side of the screen here. A node, the heavy trading area, is the most significant here near our point of control, our thick red line. 658.76 is where that one comes in. It starts to trail off above 675, then picks up again here near 615, 620. Meanwhile, to the downside, 635 is the drop-off point, and a significant node here near 600.
I can't believe you didn't point it out, too. A little bit of a pattern. Up earnings, down earnings, up earnings. We hope we break the pattern if you're a bull in this one. So we'll see what happens, kind of jokes aside. But quick look at an example trade, then we'll pick Rick's brain on the technicals. For Qualcomm, Meta, of course, reporting earnings after the close. Big expected move in this name. And what I looked at was selling a put vertical below the market, looking to lean into some of that higher implied volatility and look for some of those support levels and volume nodes that Rick talked about to potentially stand out and maybe act as support levels. So 645, 640 were the strikes that I looked at here. Selling the 645, buying the 640, going down to the May 1st expiration. That's just this Friday. And with this one, if you're able to collect $1.70, Rick, that would be your max profit, $170 there. Max loss, $330. Break even would be $643.30. Now, at the time, the moving average for 1 month was around 650, and so this was sort of just going below that mark and looking to use some of those technical levels as support, giving it a tiny bit more cushion, and then, of course, setting up a trade with about a 2-to-1 risk reward. So risk-defined, short-dated, earnings are going to have a lot to say about whether or not this trade is a profitable one from an example standpoint or not. Let's talk Qualcomm, though. This is another name that had some news, I believe, just to start out this week. And so some big moves over the last couple sessions, kind of up, down. But when you're looking at Qualcomm, a little bit different chart, I would say, than Meta, but there's definitely some similarities here.
Yes, certainly. It seems like there's always news with any of these semiconductor, even adjacent companies. So what happened more recently here, like our Meta chart here, we recently hit significant lows. In this case, it came in at 121.99, just shy of 122. From there, we've had a decent rally, in this case up 27.6%. So now we have this gap here. So really the gap was around 137 or so to about 144, but we also had some notable highs here near 139, so that stands out to me as well. Our gap held firm at around 144 after our pop to the upside here. We retreated and solidified around that level. And if you backtrack here, another low point before a gap, another relative high point here, and low points once again. So a notable price level to the downside here as well. Meanwhile, 153, our first red line here, low point, breakdown, and then resistance point. Now it's where we're crossing above after a very sharp rejection a couple sessions ago. So 159 then, another relative low, a breakdown, and then a high point, and that's about where we struggled during our pop to the upside there. Those stand out as potential areas to watch as we head into this earnings event. Now we can see that we are crossing above our longer-term 251-day EMA in orange. 153 is where that one comes in. So kind of interesting that we're breaking above this longer-term resistance level heading into the earnings event here. RSI also following suit, continuing to make relative highs, remaining in the overbought area. So an interesting setup here. Typically, as I said, you see this kind of thing slow down heading into earnings. So this is more of an optimistic outlook, seemingly based on this activity. Now we can see too that we are approaching our volume profile point of control. That's about where we saw our rejection a couple sessions ago. That comes in at around 159.40 or so. Things trail off a bit here, then another node around the 175 level to the upside. To the downside, 145 to 149 stands out as well.
Good stuff. Rick Ducat, really appreciate it. Before you go, though, quick example look at Qualcomm from a trading standpoint. Looking at a call diagonal spread, buying next week's 160 call, selling this week's out of the money 170 call. So looking for some upside, and by doing a diagonal as opposed to just a calendar spread, it creates a risk profile of like a mountain that is tilted on its axis. And as structured here, Rick, because it's a $10 wide spread and the debit is $3, theoretically there's no upside risk. So this allows for the trader to be bullish and there not be that risk that it's so bullish in a reaction that you actually end up losing money even on a bullish trade. So structured away with a little bit more margin for error, but in exchange for that, you do spend up a little bit. So it's $300 in max loss, and you will need upside more than likely for this to be a profitable trade. A move towards 170, high 160s, that's the sweet spot for this to be a potential winner by the end of the week. Rick Ducat, always appreciate it. Lead market technician for the Schwab Network. Coming up next, it's time for FOMO and another big winner of the AI trade, Bloom Energy. We got a special in-studio guest, Kevin Green. He's going to join us. He'll help break down Bloom Energy, the earnings, the response. He'll have an example trade for us as well, right after this.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Pop. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable. Wait, had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant, I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Welcome back to Next Gen Investing. It is time for FOMO, and today we got a special guest here joining us. That's Kevin Green. Kevin, of course, Senior Markets Correspondent for the Schwab Network. KGO is good to see you in person. We're talking Bloom Energy today, and this is slowly becoming one of those names that is finding its way onto watch lists because the performance, hard to ignore it.
Yeah, definitely. Also, if you're kind of looking at it from a fundamental standpoint and the demand that they have within the market, it does make sense that we are seeing this stock continuing to rise to the upside. This is a company that generates and produces basically battery fuel cells as well as some other technology, energy servers is what they call it here. And that's really in high demand when it comes to these data centers that need consistent and reliable power, especially on a 24/7 basis. Now, this company did report earnings, and they were able to beat and exceed on both the top and bottom line. We saw revenue coming in at $751.1 million. She was looking for around $552 million here. So you're seeing around 130% growth on a year-over-year basis. Their margins are also improving to the upside here. They rose to 30%, and that's higher than what we saw this time last year at around 27.2%. And then their operating leverage, once again, improving. So, Alex, this is just a story of a company that is seeing these secular trends of artificial intelligence kind of translating into their business, and you are seeing supply shortages as well for a lot of their raw materials or their input goods, and they're able to pass that on to the consumer or to those end users. That's what's being reflected in the margins here. So rightfully so, we're seeing it obviously move to the upside. You might ask about valuations, but at the end of the day, it's trying to actually grow into those valuations by these top line and bottom line growth numbers.
Yeah, this seems to be a story from my, kind of just, bird's eye view, let's call it, of right place, right time, for sure, and that's kind of what you're describing, which is like these secular build-outs, this AI infrastructure, race essentially, and this desire for power and energy, but also a company that is executing at a very high level in the opportunities they've been given. That was one of the big things that Oracle pointed out, was like, hey, we asked them to have this done by a certain time. They had it done like in half the time that we wanted them to. You don't read those stories that often anymore. A lot of times you're reading about delays. I mean, different industry. I mean, how long we've been hearing about Grand Theft Auto, whatever number they're on. It's like, is that ever coming out? Right. Bloom Energy's churning out their stuff, on time and ahead of schedule.
Well, yeah, because there's still a lot of competition within that space. So I think they want to ink some deals with some very large customers in order for them to get their brand out there. And you will see a lot of these data centers and these companies, they'll have a wide range or mix of the power production that they have in-house, right? And it's not only going to be maybe small modular nuclear reactors that are fueling their energy needs, but also if you look at Bloom Energy, let's say the power does go out or you have a fault or a shortage or any type of issue, Bloom Energy's battery packs can be that backup source of power, and that's exactly what you are seeing right now. And once again, we are just starting to see these data centers actually really being built out. So they have been able to really accelerate their gains within the market, and if they're able to execute in that fashion, like in that example that you just talked about, once again, it's good branding. You're going to get more customers because of it, and the reliability of their products looks like it has been kind of proven in the market.
And does the stock price performance speak for itself in terms of the technical picture here? I mean, this seems like a company that it'd be hard to stock price there at the moment. It'd be hard to say that this is anything but an uptrend, right?
Yeah, this is definitely an uptrend. And actually, if we can look at a weekly chart, what you actually have seen is kind of an accelerated move to the upside, a pullback or a consolidation period, especially for about a month or 2 months, and then another move to the upside. Now, this one obviously is a little bit more stretched because of the move that we are seeing today, but this is a healthy uptrend. Higher highs, higher lows, volume on those higher days as well. This is not a short covering type of rally. This isn't a low volume, high, excessive move type of day. This is actually being backfilled. And so you can make the case that maybe over time, as more competition comes in, or maybe we start seeing a little bit of a leveling out when it comes to the data center build-outs, that maybe it's not going to trade as rich. But for right now, this is a theme that has been and will probably continue to be undervalued. Not saying the stock, I'm saying the industry itself, as far as utility and power generation, will be undervalued compared to others that have their hand in artificial intelligence, like semiconductors.
We just had that chart up there, the longer-term weekly look, and it's like quarter pipe, right? It's just a parabolic type move. You looking at log charts on stuff like that, when you see that, is there things you do to make that price a little bit more useful when you look at a stock that just last year was $16 on its lows and it's trading almost $300 today? Like, some might say, hey, this is distorted just simply because the price has appreciated so much.
Yeah, that could be the case. So log charts are basically taking out a lot of that high frequency or some of the
Makes
noise.
It more percentage-wise,
yeah,
right?
So you see take out a little bit of the noise when it comes to the price action. But even if you do a log chart, at the end of the day, it's still making higher highs, higher lows. And this is a company. Just like some
people how to trade stocks, so I got to type something in here.
They had technology.
Oh, sure, no
They
problem.
are now seeing renewed demand growth, and now they are actually benefiting from it. And there is a catch-up trade that also then takes place. We see the same situation happening in small modular nuclear reactors. You see the same situation happening in the lithium miners. They sound like they're different, but they're all actually in the same business for the most part, right? Lithium is really a key input for a lot of these products, especially if you're looking at
How much does the geopolitics stuff come into this? I mean, crude oil prices, is that just a different energy market, or is there a little bit of correlation here as we look for more and more sources for power?
So geopolitics is obviously going to have an impact, at least in the near term, when it comes to power and generation, especially if you're looking at natural gas, not so much crude oil, especially here in the United States. So we don't really generate any power off of crude. But on the other hand, if we're talking about maybe some of the mining companies and some of the inputs that you need, the chemicals and the refining that you need for some of the mining chemicals and things of that nature, that's where you see that longer term trend. Where geopolitics is outside of just Iran and the U.S., you're starting to talk about Africa being a very key part of it, even Greenland for that matter. Which
Just sort of the realpolitik of it, and sort of the power centers, and sort of, I guess, the Russias, the Chinas, the U.S., and sort of where that chessboard unfortunate kind of analogy, but how that's all shaping up.
Yeah.
But you got an example, look here for us for an example trade, and I don't envy looking at names like this, not because the story is, you laid it out, it's hard to poke holes in it, but the performance, I mean, it's more than 10x in the last year. It's more than double just since the beginning of this year. Like you said, valuation starts to be a question mark.
It does, but look at GE Vernova.
Yeah.
I mean, they have constant demand. This would be different if they had a decelerating business and the price action was actually still to the upside. This is one that is accelerating both top line, bottom line, expanding margins, and you have the longer term trend there. So if you're kind of looking at this is more of a, let's say a little bit more of a shorter term trade because we're almost in the month of May here. This is actually selling a put vertical to get a little bit more neutral to bullish to the upside here. So you're selling the 240 and then buying the 230 put vertical spread here, doing this for a credit of $2.40. So the credit that you receive is the maximum amount of profit that you're going to see on this trade, $240. You have a break-even point at $237.60 with a max loss of potentially up to $760. That's if the stock is below $230 at the time of expiration. You're trying to capitalize on the higher implied volatility within this stock to take in that premium. You do have a little bit more risk to the downside because that credit's all you can receive, and that's really what you would like to see. Even if the stock stays where it's at right now and implied volatility moves lower, this trade could potentially be profitable.
Yeah, it's on a 3-to-1 risk reward, which should give us some indication of the probabilistic nature of it. But essentially, you're saying with this style trade, I'm willing to take a 3-to-1 risk reward that this stock will be, at worst 15% lower than where it is right now in 2 weeks from Friday. So it's certainly a name that can move that much. It can move that much in a day. But that's essentially what the trade is. Really appreciate the insights, KG. Looking forward to more. But we're going to take a short break. We get back. It's time to discuss the big show of the day. And then, of course, is this Magnificent 7 barrage of earnings that we're going to get after the close. Our next guest is going to help us preview what to expect. We'll be right back.
She's got your smile.
Carl.
Yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. They have everything we need all in one place.
I can set up her college fund.
I've been learning about new trading strategies.
Schwab helps me generate retirement income.
All this Schwab is everything you need is making me cranky.
Does somebody need a nap?
Schwab!
Invest your way with Schwab.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Welcome back to Next Year Investing. It's now time to welcome in our next guest. That's Paul Powers, the CEO of FISNA, to help assess the landscape of AI, Magnificent 7 earnings, and more. Paul, happy Wednesday. Thanks for joining me this afternoon. I guess we're all clued in to these earnings, not only because they're like 15% of the S&P 500, like $10 trillion in market cap, but this is like this is like ground zero for like where this is all taking place, this investment, this R&D. What are we looking forward to? What are we going to learn from these companies when they give us the numbers?
Well, you're 100% right. This is sort of like the Super Bowl week for the stock market. This is the single biggest week of the season, and this season is not going to be about AI hype. It's going to be about AI payoffs. I think what everyone's looking to see is, okay, we're spending countless billions of dollars investing in the data centers, GPUs, all this infrastructure. Are we actually going to see a return on this investment? The thing that we're not going to see, though, is, quite frankly, the answer to that question. These earnings are going to be relatively, short-term focused, and the AI play here is a long-term one. I get the question, but I get the concern. Okay, people are spending $20 a month or so on subscriptions to this or that chatbot, but we're spending really serious sums of money here for this AI infrastructure. The thing is, that's a disconnect. The long-term picture is substantially stronger AI spending, not just by consumers, but particularly by companies, more so on the physical AI side of things, which we're sort of in the setup era for right now. We're not quite there yet, but we're very, very close now.
I want to explore that with you in a second, but before we do, we kind of think the short term. We get a nice little kind of case study in what the market is interested in, and just the dichotomy in my mind between Meta and Apple. Two very successful companies, two very critical companies when it comes to everything artificial intelligence, but two companies in my eyes, and I'd love your thoughts on this, that have taken drastically different approaches. Meta is trying to win the race. They are spending as much as anyone. Apple has sort of taken a step back and said, in my mind, that, we have the device that you're delivering this to right now. We can play kind of kingmaker and just pick the winning horse and utilize your technology. When you look at the dichotomy between those two companies, what do you learn from them when you see those two different approaches?
I think the approaches are going to start merging a lot more than diverging like we've seen. Traditionally, you think of Meta as a software play and Apple as a hardware play, but we're seeing Meta put more and more money into the physical AI space with things like the smart glasses with displays. We see Apple doing the same thing. They're going to start to compete in the middle. So there's not going to be, so the strategies are different though. And I think that when it comes to AI, and especially this new era that we're entering into, having the hardware is not enough. Ultimately, having the data, having the core technology that powers that hardware is going to be substantially more important than a large adoption of your physical device by a large segment of society. That's something that can be replicated. You can buy a Samsung, but if somebody else has AI that's 10 times more powerful, you can't just replicate that by buying another phone.
Paul, someone who's building a business in this space and watching how it's changing rapidly, is there any business right now that is safe from disruption from AI? I mean, I look at an Adobe and Salesforce, and sure, maybe that was some of the easier stuff initially for what the projects were working on to show the signs of disruption. But 5 years ago, to challenge the moats or the business models of either one of those companies would have been, something that would have gotten you thrown out of a room. And now it's like if you're confident in them, you're going to get thrown out of the room. So is there anything that you look at right now and you say, hey, for the time being, AI's not going there?
No. AI is going into everything much faster than most people realize. Most companies are going way too slow with the adoption of AI. They're using traditional enterprise software purchasing timelines, and it's just way too slow for the modern era. The companies that are safest for disruption from AI are the companies that are enabling it. NVIDIA, in my mind, is the safest company right now because they're building the infrastructure for AI. So it doesn't matter who adopts it the fastest, they're still going to be selling the GPUs. But when it comes to things like Adobe and other companies that you mentioned, yeah, there is some serious concern there, and it's completely inaccurate to say that there's any area of society that's safe from a disruption from AI. It's not true.
So as we fast forward, then, and I'm sure you've thought about this a lot as you structure your own business, you look for investments, and you think about where we're going. And it's always just a range of outcomes, right? There's never a perfect path that we're going to take. But I keep coming back to just sort of the common sense of the easiest way to start seeing return on investment is to cut one of the biggest costs that many businesses have, which is labor. But if no one's working, who are you selling to? And it's sort of this like this cycle of it? How does it all fit together? And in your mind, is it more just distortion of what labor looks like and enabling greater efficiency, or is it truly job replacement that we're working towards?
Long term, we are talking about massive job disruption and in a lot of cases replacement. But in the immediate term, and certainly for anyone thinking about this from an investment perspective, over the course of this year, we're talking about an efficiency gain. And where I would look for that end is not just in the traditional areas of, what we see with LLMs, which like it's chatbots are able to speed up the writing process, making video editing faster, but also the areas that are more physical. Robotics are benefiting from the acceleration of AI as well, and we're going to start seeing physical labor start to be augmented by AI and by robotics in a way that we have, at a rate that we've never seen before. And I don't think many people realize just how quickly that's evolving and how fast the physical AI space is evolving and how impactful that is across countless industries that most people kind of look to as safe havens from AI disruption. The reality is that there's really not an upper limit to it or a horizontal limit to it. AI can go everywhere and it can augment everything that we do. So we should be looking for companies that are smart, forward-looking, and that are talking about not just what everybody else already knows today and about making their chatbot faster or a little bit smarter, but looking forward and saying, okay, if you're putting this much money into infrastructure, are you really investing into that next phase, that physical era of AI where the reality and the virtual world that we work in start to meld together? That's where all that money is ultimately going to need to be going towards, because that's where businesses will have to spend the most to get the biggest return.
Paul, we're out of time. We got to explore this more. I'd love to have you back and discuss further. It's Paul Powers, CEO of FISNA. AI, it's disrupting everything, as he said. So we'll see what these earnings are after the close from some of the biggest companies. But we're going to take a short break. Coming up next, under 30, we're going to talk some SoFi with Mr. George Tillis, maybe a little Fed preview as well. Just over 10 minutes till the FOMC decision. We'll be right back.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, the SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on schwabnetwork.com.
Morning movers, be the first to find out what's shaping early market action. Check, options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
I'm Nicole Petalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, The award-winning trading platforms. Bring your trades into focus on thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and insights.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing up houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Welcome back to the Extra Investing Mountain Coffee. It's time for Under 30. We got a special guest, George Tillis, joining us over the phone, Senior Markets correspondent, to help us discuss SoFi. George, we've come back to this stock a lot over the years. It's a very popular kind of social media investor stock. It's done quite well, but not doing so great today, down 13%. What didn't the street like?
Well, I think if you look across the board, revenue was higher at 41%, beating estimates. EPS came in pretty much in line around 12 cents. Net income was higher, 167 million. Number of new ads in terms of members up another 1.1 million. So for what it's worth, all these numbers look like they were great. Total loan originations grew, member growth grew 35%, product growth was 39%. I think the challenge lies a couple of things. One is the environment we're in the fintech space has been relatively challenged. The other thing is the financials. If you look at the recovery in the market since the March lows or late March, early April lows, technology has recovered. Financials really have not. So that's I think problem for SoFi. It's tied into crypto as well, so that's something you have to keep in mind. There's also, again, when it comes down to things like referral fees and interchange fee revenues and brokerage fees, those revenues grew about 24%. And so those are higher margin areas of the business, which only grew about 24% relative to total revenue of 42%. So it looks like, again, they grew the number of members quite substantially, but some of the internal metrics associated with divisional breakdowns, especially their technology platform segments, didn't grow as much as total sales. I think that's why stock's under pressure.
Good stuff. George Tillis, short and sweet. Thank you as always with the update on SoFi for Under 30. We got a Fed meeting in about 5 minutes. Not a lot of news expected out of it, but it is, as Sam Vadas put it, the swan song for Fed Chair Jerome Powell. So make sure to check that out. We'll have a Fed special of the watch list coming up next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time.
with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists, streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com. Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant, I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Welcome to the watch list. I'm Nicole Petalides. This is your Fed Day special at 2 p.m. Eastern Time. We are live on the floor of the New York Stock Exchange, moments away from the Federal Open Market Committee announcement of its latest rate decision. We'll have all the details, wall-to-wall coverage of the FOMC announcement and Jay Powell's last press conference at the bottom of the hour. In the meantime, stocks have been looking to the downside throughout the day. I'm watching the tick-by-tick action here on stocks, on everything across the board to see how we are faring. At this moment, we are waiting for all things Fed. And we're starting to see, so Fed 8 to 4 holds the benchmark rate. Looks like they hold it steady. Okay, no change, just as we expected. Not surprised to see that. We'll get more details.
Woo!
The S&P 500
nailed it.
down 15 points at 71.23. The Nasdaq
We nailed it.
2 points at 27,081. The Dow is down 333 points, and the Russell pulled back. The 10-year bond yield at 441.
Ooh, you got $4. Better than I did.
He just moved higher than moments ago. Was at 439 just as we started the show.
Well, as I signed up for my Advantage plan for Medicare, I made moolah. It's not going to be a waste of money. I'm extremely happy. I won the poll. I'm yawning. No more down. It's a yawn. Everybody won. Oh, shit. That looks like a yawn to me. I was cheated out again. Although the 7150s dropped like a rock. Okay, prepare ye in the name of the Lord for the rebound. Brandy. 175. Rigged poll. Rigged like our elections. SPX at 175, please. The 7150s. And the crowd's wondering, how does he do it? You know, the hardest thing in my life has been signing up for this Medicare crap. I feel like I'm an old man. God. The sign of death is in your legs, and I've been getting it. So as I say my farewell speech, I love everybody. For I'm Washboardjim, the founder of the Sneaky Snake Trading Strategy, where I talk about chart patterns, moving averages, and being in the now. And right now I'm in the I mistyped. I misspoke. 7150s at $1.75. I won't tolerate the price to go any lower than this. It's time to burn one, Mark says. I might go do that tonight because this has been very stressful. Signing up for Medicare, Medicaid, or whatever it's called. Yeah, I messaged Hey Sue this weekend. I said, what the heck? We're now at 205. Washboardjim called him at 175. It wouldn't hurt for us to touch the 9, please. Oh God, Nike. No. You won't even touch $40. Nike cuts 1,400 rows in second round of layoffs this year. That should be good for the stock pickers. I don't want it to. I want it to stay. Oh God. Now I'm at 170. Jim, you're up almost $125 at one moment. I'm not going to sit here and watch it fall this time. Ugh. Double bottom. Oh, God. Why? I stopped yawning now. Now I'm down 125. I might just get out of these because they're too far out of the money now. I didn't want that candle. Shit. What's your language? Come on. Oh, gosh. The market didn't like the Nike layoffs. Oh, God. Powell done it again. I have to add on. Today's been a toughy day here. There we go. Medicare. Where are you? Social Security. Medicare. Medicare. And Social Security. Always clean. Security. Medicare. Now what did I do with that? Damn it. One day will come where I won't have to file as much. I hope. Now I got 175 and 130. I'm at 160, I could sell them here. $180, yay! Okay, profit. Okay, it's now 1:17, time for a drink. Nancy, a shot of vodka and a Valium. Ah, darn it. There's 185 there. 190. Well, good job, Jimmy. Anybody remember these cars right here? The Ford Pinto. 1972. So Fomax says the market economic activity has been solid.
Low double digits. Now they're at mid double digits. So the fundamental backdrop has been relatively strong, and I think that's been supportive.
Totally opposite of what the analysts say. Totally opposite.
Where it gets better, unless and until we find an exit ramp here and start focusing on the things that are really driving. A lot of what's driving the stronger earnings is coming from CapEx spend for artificial intelligence. We're going to learn more about that tonight.
Yeah, and that's part of it too. You know, the question too was about hiring, firing, and the job picture, and whether or not AI was being used as an excuse not to hire.
That's a really good point.
What do you think about that?
That's a really good point, Nicole. When you think about the cohort that is that 24 to 30-year-old, that's the highest of the unemployment rates. When you think about that, just out of college, getting that first job, and I think that slow to hire has been an unintended consequence of companies starting to use artificial intelligence, or at least leaning into it such that they don't overstaff at the front end of this. So I think it's going to be a while before we understand the transition we will have to go through with large-scale adoption of artificial intelligence. I certainly don't think we're there yet, but I think that uncertainty around both the war and the adoption of artificial intelligence has put us in a place where, while we're very slow to fire in corporate America, we're also very slow to hire. And that's put us in a place where our monthly job reports have been something like 25,000 a month.
Well, what do you think would be the range? I think we were just talking about 375 at one point. The range of the 10-year bond yield in the next 6 months. What would be the low end and what would be the high end, do you think?
Yeah, well, we were heading to a place where, 3 3/4 to 4 1/4 made a great deal of sense. We're up at 440 now, pushing up against the recent resistance level. And the reason for that has everything to do with what we just talked about in terms of the inflationary pressure of higher energy prices. So I think to get that range back down to where it'd be a healthier place for the housing industry and, you know, for overall credit and demand for credit would be the end of the war, a big piece of that. Understanding better the adoption of artificial intelligence and how much that is improving in real-time productivity, that would be another piece of the puzzle. If, in fact, we have a better understanding of that after July 4th and heading into the fourth quarter of this year, I certainly think yields on 10 years could start working their way down. And I think that's, you know, that's incumbent on a couple of large things happening. A, realizing and seeing real live proof of productivity increases, which we've started to see, and actually seeing commodity prices start to come down.
Right. All right. Art Hogan, great to chat with you, Chief Market Strategist at B. Riley Wealth Management. Nice to see you, Art. Thank you. Coming up next, Jay Powell's opening statements, and can't wait to hear from the Fed chair all about today's rate decision, the Fed's path forward. We'll be right back.
Man. Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
What just happened? Oh, I'm at a different spot.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles.
I know he does have a certain arrogance, like I'm better than you kind of attitude. Oh, I was going to make my tea, my drink. We got George.
Also becomes cutting rates. You know, if we do assume Kevin Warsh comes in and he goes towards cutting rates while inflation is high, that's going to cut into bank profitability. So that's the other you know.
Why is Super Microcomputer falling?
Inflation is still elevated because that's going to cut
on
into
Wednesday
profitability because of the fact that the real return on lending will be down if rates are below inflation.
It's not one that's been able to hold
right now, but it'll be interesting to see what he says associated with their
SMCI
policy outlook, and also maybe addressing what he believes the three dissenters are looking at in terms of their objective change in terms of their more neutral outlook versus more easing outlook.
Yeah, and I think about the fact that all these financials are lower today, and Kevin Warsh is going to have to deal with folks who don't even want easing language in the committee statement. So I think that's another factor. But you know, we went to session lows, but we're creeping back on stocks.
Yeah, I mean, we're creeping back. I think the bond market is interesting. You got to focus on what's going on in that area, because if you look at 2-year yields right now at the policy range, the higher end of the range is 3 3/4 or 3.75. 2-year yields are creeping back above now 3.9%. So 2-year yields are suggesting, at the very least, that rates are now too low. So that's something to keep in mind. And the 10-year rate now above 4.44. Again, has been creeping slightly higher, and that's to be expected considering energy inflation that we've seen. So focus on the 2-year rate. That really is where policy is driven from the Fed. And right now, like I said, it's above the higher end of the current range, which is 3.5 to 3.75.
Yeah, and the Fed characterized inflation as elevated, a shift from somewhat elevated, right? That doesn't necessarily sound great, citing global energy prices. Said it remains attentive to risks on both sides of the dual mandate. We are waiting for Jay Powell to come out to the podium right now, but the committee is pledging to weigh both sides carefully. You know that they need to really balance the inflation, you know, price stability and full employment. And as far as the job gains, well, they've remained low on average. So I really do want to hear what Jay Powell says on his presumably last meeting here today. So he should be coming out to the podium. And I believe he's here. We're waiting on him. So in the meantime, you know, I do think it's interesting how they also talked about around going into the PCE, and, you know, it depends on how long this really lasts. I'm not talking to you, George, because I figured he's going to walk out, and the minute you say one word, I'm going to have to interrupt. But that's really my final thoughts. And right now, we are seeing stocks to the downside. Final quick thought?
Well, yeah, keep in mind, volatility is elevated because of the transition between the dissenters, that we may end up moving towards a more neutral, objective policy that is going to be presumed more restrictive, and therefore that could create some volatility in this market, at least on the equity side. And then, unfortunately, crude oil just continues to move higher for whatever reason. The tension still exists in the Middle East, which again is creating a conundrum for the Fed in terms of their policy mandates and objectives.
Yeah, and it's interesting now. So we've had the third meeting where we stay on hold. The last cut was actually last fall, and we did have Danielle DiMartino Booth, who was pushing for a cut aggressively, saying it's time to get in there and try and help small businesses and do that. Yeah.
Yeah.
Yep.
Yeah, look, they can cut.
Yep.
The challenge is there's no free lunch. That'll come from bank profits. Again.
Here we go, George. So it's Jerome Powell, Jay Powell, stepping to the podium here in Washington, D.C.
Oh, God. No.
Good afternoon.
Good afternoon, Dicklick.
My colleagues and I remain squarely focused on achieving our dual goals of maximum employment and stable prices for the benefit of the American people.
And you've done a horrible job.
The U.S. economy has been expanding at a solid pace. While job gains have remained low, the unemployment rate has been little changed in recent months. Inflation has moved up and is elevated, in part reflecting the recent increase in global energy prices. Today, the FOMC decided to leave our policy rate unchanged. We see the current stance of monetary policy as appropriate to promote progress toward our maximum employment
I don't believe you.
and inflation goals.
Interest rates are still high, you dicklick.
To a high level of uncertainty about the economic outlook, and we will remain attentive to risks to both sides of our dual mandate. I'll have more to say about monetary policy after briefly reviewing
monetary policy.
Recent indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand at a brisk pace. In contrast, activity in the housing sector has remained weak. In the labor market, the unemployment
It's because interest rates are too high.
In March, and has changed little in recent months. Job gains have remained low. A good part of the slowing in the pace of the job growth over the past year reflects a decline in the growth of the labor force due to
God.
lower immigration and labor force participation.
Help me, Lord.
Total labor demand has clearly softened as well. Other indicators, including job openings, layoffs, hiring, and nominal wage growth, generally show little change in recent months.
When we had the Carter recession, monetary policy only lasted over less than 2 years. These suckers have been at it for 5 years now. 5 years. And the economy's 20 times better than it was back then. The debt just keeps getting deeper and deeper and deeper with its high interest rates. This cat doesn't get it.
It largely reflects the effects of tariffs on prices in the goods sector. Near-term measures of inflation expectations have risen this year, likely because of the substantial rise in oil prices. Most measures of longer-term expectations remain consistent with our 2% inflation.
God.
Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate.
They're so out of touch.
To 3.75%.
Calm down, Jim. I don't want to punch him in the face.
Uncertainty. In the near term, higher energy prices will push up overall inflation. Beyond that, the scope and duration of potential effects on the economy remain unclear, as does the future course of the conflict itself. We will continue to monitor the risks to both sides of our dual mandate. We are well positioned to determine the extent and timing of additional adjustments to our policy rate.
Big bounce.
Based on the incoming data, the evolving outlook, and the balance of risks. Monetary policy is not on a preset course.
Snake breakout, pull back, double bottom, high or low.
On a meeting basis. This is my last press conference as chair, and I will close with a few thoughts. First, I want to congratulate Kevin Warsh on his advancement out of the Senate Banking Committee this morning. This is an important step forward, and I wish him well as that process continues. The Federal Reserve exists for one fundamental purpose:
to screw us over.
Economic conditions in which American families and businesses can thrive. Stable prices, a strong job market, and a financial system they can depend on. Every decision we make, whether about interest rates or regulatory and supervisory matters or other issues, is made in service of that purpose. Our decisions reflect the collective judgment of the Board of Governors and the Federal Open Market Committee, colleagues who demonstrate analytical rigor, principled judgment, and a genuine commitment to the public interest. Our collaborative and deliberative process has long reflected a shared commitment to finding common ground in service to our mission. This institution is resilient, capable, and staffed by professionals of extraordinary talent and exceptional dedication. It has been a privilege to serve alongside so many great public servants, governors, and around the Federal Reserve System. The Fed's work is only as effective as the public's understanding of it, and you, the press, are essential to keeping the public informed about what we do and
That's
why.
your job, you idiot.
The people we serve benefit from your careful reporting. I welcomed the announcement last Friday by the U.S. Attorney for the District of Columbia that she had closed the criminal investigation.
Oh,
She also
God.
noted, however, that she would not hesitate to restart the investigation. Over the weekend, the Department of Justice provided assurances that they will not reopen the investigation unless there's a criminal referral from the Fed's Inspector General. And, absent such a referral, if they do appeal the recent court decision, they would not seek, as part of that appeal, to restart the investigation or send new subpoenas. I've said that I will not leave the board until this investigation is well and truly over, with transparency and finality, and I stand by that. I'm encouraged by recent developments.
Well, you're a tough guy.
The remaining steps in this process.
You're a tough guy.
My decisions on these matters will continue to be guided entirely by what I believe is in the best.
Thanks for wasting billions of dollars, sir.
After my term as chair ends on May 15, I will continue to serve as a governor for a period of time.
I don't even want to look at him.
To be determined.
I might hit him in the mouth.
Profile as a governor. There is only ever one chair of the Federal Reserve Board. When Kevin Warsh is confirmed and sworn in, he will be that chair. Once sworn in as board chair,
finally somebody knows what they're doing.
Elect him to chair the FOMC as well. As I regularly point out from this podium, our success in delivering our goals matters for all Americans. I'm confident that the Fed will continue to do its work with objectivity, integrity, and a deep commitment to serve the American people. Thank you, and I look forward to your questions.
Thank you, Mr. Chair.
Mr. Chair, you know you're a dick lick.
Come from the podium in different places, but appreciate that. Can you talk about what is gone into your decision to remain on the board? What kind of criteria are you weighing, and how long might you stay? Thank you.
Sure. So, you know, my concern is really about the series of legal attacks on the Fed, which threaten our ability to conduct monetary policy without considering political factors. And I want to note here, this has nothing whatever to do with verbal criticism by elected officials. I've never suggested that such verbal criticism is a problem, and neither has anyone else here. But these legal actions by the administration are unprecedented in our 113-year history, and there are ongoing threats of additional such actions. I worry that these attacks are battering the institution and putting at risk the thing that really matters to the public, which is the ability to conduct monetary policy without taking into consideration political factors. It is so important for our economy, for the people that we serve, that they can depend over time on a central bank that operates that way, free of political influence. It's part of the absolute foundation of this amazing economy that we have. It's just one of the many reasons why the U.S. economy is the envy of the world. That piece of institutional architecture separates successful countries from unsuccessful countries. It is extremely important, not for the people who work at the Fed at any given time.
Oh, you're a tough guy.
That the Fed remain.
You got to read it. You got to read it
in a way that doesn't get pulled into politics, trying to help or hurt any particular
you're full of shit.
Or political party. It's critical for the people that we serve. In terms of when I would leave, I will leave when I think it's appropriate to do so. Was that all your questions, or was that?
Well, I just have a follow-up, which is, what would you say to the criticism that by remaining on the board, you're actually taking a political act and denying President Trump the majority of the board, which as president he would have if you left?
I don't see that at all. And,
I do.
You know, I'm literally.
You're a liar.
Because of the actions that have been taken. I had long planned to be retiring, and you know, the things that have happened in the last 3 months have I think left me no choice but to stay until I see them through at least that long.
Oh God.
You know, in addition.
You just want to screw over Trump, you dick.
Will interfere. My intention is not to interfere. You know, I was a governor for almost 6 years, and the tradition is at the Fed that governors who understand how difficult the role of chair is, and as a soon-to-be former chair, I do understand how hard it is to get consensus with 19 strong-minded people. You work with the chair. You try to be heard, but also collaborate with the chair and try to support the chair when you can. When you can't, you can't. And I think that's the attitude that people generally take, and that's the attitude that I'll take.
Nick.
Chair Powell, if I could ask about the inflation outlook. In March, you described the standard practice of looking through energy shocks as conditional on inflation expectations staying anchored. Since that meeting, there has been very little progress reopening key energy trade corridors. Can you help us understand how the inflation outlook has changed in the intermeeting period, beginning with the prospects for tariff pass-through resolving on the timeline that you had outlined in
Okay. We all know my opinion about this man.
I would look at it this way. For a long time...
He says he's working for the people. He's working for the rich. the people are the ones that are paying the high interest rates and the high inflation that went on under the Biden watch, and he didn't have a clue. And he just let it slip by. I mean, to have that job, you got to look into the future. You just can't look at the results. That ain't the way the game works. He's a reactor. We need proactive. He's flunked the test.
That we're already looking through the tariff shock. So I think we're going to be very cautious.
I'm getting back in this trade.
But the question about looking through energy really is not in front of us right
71.25s at 3.
And I think we'd want to see the backside of that and progress on tariffs before we even thought about reducing rates.
So if I could follow up, the statement today preserves language that has taken on some meaning as it was socialized when the committee was actively lowering rates. Why is that easing bias still ripe, given how different the inflation outlook is now versus a meeting or two ago? And what more would have to happen for it to get evicted?
So that was, as you will recall, we had a discussion about that at the last meeting. We talked about it in the press conference after the March meeting. We had the same today. We had quite a vigorous discussion about that very issue and the guidance, and is it still appropriate and that kind of thing. And I would say that the number of people on the committee who either could support that language changing to a more neutral stance so that a hike is as likely as a cut. And that number has increased over the intermeeting period, and it's easy to see why. I mean, it's a good question, right? You see, inflation has moved up over the interim a bit. Core inflation is 3.2 now, moving, albeit just a little bit, in the wrong direction. And we know that there will be, that there's.
I'm almost up $100 contract,
and we don't know how much that will be. We're going to need to see. So. It makes all the sense in the world that people would look at that and we'd have a vigorous discussion about it.
I got a vigorous discussion.
3 people dissented over the language. I think all of those people.
You need to do jail time.
Great decision. So the majority of the committee did not want to do that, and I didn't think we needed to do it at this meeting. It really was just a question of why do we need to do that now? We have so much to learn. There's so much uncertainty about the path ahead. There doesn't need to be any rush to make that decision now, because what happens in the next 30, 60 days, even by the next
I think
meeting,
different than all these guys.
Change the picture around that language. So, it was.
I've seen days a whole lot worse, and it was under his watch when the market dipped 30% under Biden. Well, it wasn't what they call stretch. I can't even think of the word now that he called it back then. Started with an S. There's 560. Boom, baby. Thank you very much. Woo! Out at 550. How easy was that? Do we have any pow-pow lovers in here? Anybody love pow-pow? Think he's done a great job? Johnny, I know you like him. Not Ringo, but the other one. Magnificent. I can't get nobody to admit they like pow-pow. Nobody has an opinion? Randy, you like Pow? Jim, why'd you take that trade? Well, it was a triple bottom. I felt like it was appropriate. Did Powell make you make that decision? I had to get some steam off. I mean, what else could I do? He is making it political. If he...
But no, not really. I mean, I'm thinking more of the other things I mentioned.
Hi, thanks for taking our question. I wanted to ask a question about your tenure, and Chris Rugaber at Associated Press. During your tenure as chair, you often spoke about how disadvantaged Americans benefited from extended periods of low unemployment. In the new framework the Fed adopted in 2020, some economists elevated the Fed's employment mandate. Are you worried that the pandemic inflation spike that followed will make future Fed chairs more reluctant to pursue a hot jobs market? And should they be?
I don't know the answer to that. I mean, what we experienced in the teens, the mid-teens, was
680
low levels of unemployment for a long period of time and no reaction from inflation. And we all very much took notice of that. We also noticed that
what do they call it? Statutory?
People at the bottom end of the income spectrum. And we had many reports of
reports.
Like a fairly stable equilibrium, and a lot of benefits were flowing to people at the bottom end of the.
That guy's looking at him like he's an idiot.
Including companies were, setting up in.
One thing that I don't do when I'm trading stocks is trade off reports, because none of them are never accurate. None of them. The unemployment has been some of the worst recorded information that you can get. The employment reports. They're never right. Never. I've never seen one right that wasn't adjusted. And then the adjusted get adjusted. This guy, I mean, you got a bunch of billionaires up there making decisions that never put gas in their own frickin' cars.
That's been a long time since we have had to worry about that. Well, actually, during the pandemic recovery, the labor market.
Welcome back to the watch list. We were watching our Fed Chair Jay Powell on his presumably last speech there to the press and to the world from the details of our Federal Open Market Committee meeting. I bring George Sillis back in, senior markets correspondent, and I think the first piece of wow is that he does plan to stay on for a period of time, and that is because of concern about the legal attacks. When asked if it was a political decision, saying, I don't see it that way. In fact, he noted that prior to that legal action, he had for 3 months been thinking about retiring, and then said, I'll have to stay on at least that. So
exactly.
I took that to mean, and I'm now being subjective, to mean that he's staying on at least 3 months, because he said for a period of time. He didn't really say, how long he's going to stay on.
Yeah, he did mention, he says it's till a point where he seems it or deems it appropriate. So for what it's worth, can't say how long he'll be on, but there's ongoing legal proceedings associated with the various factors that I think he's trying to address prior to him leaving. I do think that it was great that he did, acknowledge the Fed as an institution, which it is. It's a group effort, and I think it's good that he's congratulating potentially Kevin Warsh now being the next chair. And so with that, for what it's worth, I think he's leaving on a good note in that regard. The other thing is, he really focused, and I do stress this, you know, I look for keywords and statements, and he talked about the word significant, the word substantial, again, when he talked about energy. So he's really focused on, you know, the ongoing impact on oil prices as a manifestation of, you know, headline inflation, but he also addressed the issues with core inflation. So that seems to be the focal point. And as I mentioned earlier, he did bring up tariffs as well as immigration, but he does talk about how the labor market now is not necessarily a function of inflationary pressure, so it seems to be more exogenous in nature as a function of oil prices.
I also, let me ask you this. He said, I think this is and will be very normal, standard kind of transition process. You know what that doesn't say to me? That doesn't say to me that he's staying on 2 years. It says that he's going to keep there at the helm, sort of stay in the background, not get in the way of Wash. As a matter of fact, when he started speaking, I really thought he was done. I almost was surprised, like, oh, what he's saying is like he's going to get out. And then what he say? And then he said, well, I'm going to stay on for a period of time because I have no other choice. But at first it sounded like he was gone. So I think it seems like he's not staying on for 2 years. He wants to make sure that the Fed remains what it's meant to be, and all the wonderful things he said about, you know, the committee working with collective judgment and principled rigor and common ground for our people and our businesses and such. So he sort of led with that. I thought that was also nice to say as well.
No, definitely. I think, you know, he's making a slow transition away versus one that's abrupt. And I don't think he's going to stay on for the 2-year period, which he's allotted to as a governor. I think, you know, he's talked about how he wants to retire, and he did mention that. So for what it's worth, again, maybe just a slow transition in the backdrop as the change of the guard, at least from the chair position, occurs. Yeah. And I think it's, you know, it's due diligence he's doing, as well as, again, maintaining, you know, the proudness of the institution. I think that's important to keep in mind. It's not one person. It's not a policy objective made by one person. It's a committee. It's done through a lot of, you know, research and vigor and a lot of math. They're just using, you know, objective math to make their policy moves. Again, so I think for what it's worth, again, he's making the right decision in terms of that slow transition. And then, you know, the other thing is keep in mind going forward, you know, look at the bond market. That'll give us some inclinations of where policy rates will move, especially when it comes down to the energy markets, which are unfortunately, you know, a big issue with inflation, which could potentially bleed into the core inflation aspects of our economy going forward.
Sure. Yeah, and that's what he said. The economic outlook is highly uncertain, and now with the Middle East, that adds to the uncertainty. Highly uncertain, and then the Middle East adds to the uncertainty. So, George, thank you. It was great to speak with you, George Sillis. I mean, the final takeaways here is that, you know, elevated inflation, the job picture is sort of low on adding jobs, housing weak, business spending looked good. There were some pros and cons, but some concern here about inflation, no doubt. I'm so glad you're with me. I'm Nicole Petalides. Thanks for being with me here on the watch list. We head back to Washington for our special coverage with Jay Powell.
Office of the Chair.
And in your view as a soon-to-be governor, how do you see the risks of oil prices bleeding into core inflation in the coming weeks? Because that was, it seems like the commentary that was coming from particularly some of the Reserve Bank presidents, they were elevated concerns about the bleed into core. And, you know, here we are with 3 cents now. What do you see as the prospect of core inflation?
You know, those prospects are real. Remember, though, and they're real, and the real thing is we're going to have to wait and see. We're going to need to see. And the good news is we think our policy stance is in a very good place for us to wait and see. We're right kind of at the high end of neutral or perhaps mildly restrictive. The labor market shows more and more signs of stability, whereas inflation is kind of misbehaving. And so maybe a little bit of restriction or the high end of neutral is just the right place to be. So we can wait here and see how things work out before we act. And we'll see how much how much does come through into core. You see it already in airfares, of course, but you may see it in many other places. we just don't know yet, and it's so unknowable because how long will the strait be closed? You can develop any number of scenarios that you want, but we really won't know until we know. So fortunately, we're in a good place to wait.
9:10.
Thanks, Mr. Chairman. You started holding post-meeting press conferences for every meeting as opposed to the ones with just with SEPs. Can you talk about why you see that as a net positive?
CORZ.
We always said when we were doing quarterly press conferences, we always said we can move at any meeting, but we only ever moved at the quarterly SEP meetings where we had the press conference. So if you think about it, during the pandemic, we were moving like a lot at every meeting and sometimes between meetings, and doing that without a press conference, I think would have been quite challenging. It's become the industry norm. It's the standard. I don't know whether that has to remain that way. I don't know. I mean, it's just something people have become used to, and I do think it's quite helpful to, I try to deliver a message on behalf of the committee rather than 18 other people going out and delivering their message, and it's going to be all over the place because we do thankfully have widely disparate views.
Thanks. The other thing I wanted to ask about was the communications review from last year. Could you describe the debate last year, what changes were considered, what you wanted, and what prevented action, any action on those changes?
So, yeah, I'm not going to go into the real small specifics, but what we found very quickly was that making changes, making really large changes, for example, to the dot plot or the SEP, it didn't have, we couldn't come up with anything that had really broad support on the committee, and so we just moved on. We didn't really do as much on that as we might have. And I was never the world's biggest fan of the dot plot, but you can't.
I'm not the biggest fan of you either.
We've looked at a bunch of things, and it's something. Like I said, I think every new chair is going to look at our suite of communications, and think about what would be changes. We are the only major central bank that doesn't publish a forecast, and that's because we have a 19-person committee, and you try to do it. You try to do that at the board. That's hard. At the committee, that's hard. It's hard if you do it at the staff. So it works. I think our communications are fine, but looking at doing it in a different and better way is the most natural thing in the world.
Thank you. Colby Smith with the New York Times. If I could follow up on Mike's question about hikes, are we right to assume that the hawkish outcome for the Fed is still one in which the committee just extends the pause in rate cuts? And to what extent is there a growing sense within the committee that monetary policy really isn't just restrictive at all right now? The economy is holding up relatively well despite this major energy shock. The unemployment rate has ticked lower. Inflation was moving sideways even before the war and is now moving higher. So where is the committee at on that debate?
Where we're at is we think our policy rate is in a good place. If we need to hike, we will certainly signal that, and we will certainly do it. And if we need to cut, then, or if it's appropriate to cut, then we'll signal the opposite. I think because we feel like we're in a good place to move in either direction. Nobody's calling for a hike right now, so it really is going to depend on how things evolve, and that's really where it is. As I mentioned, much closer question this cycle on changing the guidance, but ultimately we didn't.
And as it relates to the war, at what point do you...
Oh, they cut her off. How rude.
Good afternoon. You were just hearing from Jerome Powell there in what is likely his last press conference as the head
Thank
of
God.
the Federal Reserve. But it is 3 p.m. on Wall Street, and this is Market on Close. I'm Marley Caden coming to you live from our Chicago headquarters.
And I'm Sam Vardas, coming to you live from the floor of the New York Stock Exchange. Let's take a look at what is coming up on this very busy show. We'll have you covered with all things Fed after the decision. Leaving rates unchanged, Kevin Warsh advances to the next step in his nomination. And what's next for Jerome Powell? After the bell, it's a lineup of heavy hitters reporting earnings. We'll be reacting live and breaking down reports from Meta, Amazon, Google, and Microsoft as soon as they come across the wire. But walk us through what you've been watching today, Marley.
Computer's ready to get us across all those earnings, Sam, but keeping an eye on earnings we've already gotten today. Seagate surging after its fiscal third quarter results blew past Wall Street estimates. The data storage company's results surpassed what was already a high bar following a more than 700% run-up over the past 12 months. Earnings were up 115% year over year, while revenue increased 44%. And NXP Semiconductors also soared following an overall Q1 beat and issuing stronger than expected second quarter guidance. Several analysts raised their price targets on this name after the release, including Morgan Stanley, JP Morgan, and Needham, to name a few. Starbucks also having a good day as its turnaround efforts are gaining momentum. Same-store sales growth came in almost 2x the expectation, along with rising revenue and EPS that both topped estimates. The coffee maker also raised its full-year profit and same-store sales growth outlooks. Lots to talk about today, but before we get to any of that, let's take a look at where the markets stand as we just got that rate cut, interest rate hold decision here. We are looking at a mixed picture. The S&P trading down a little bit more than 0.1% right now. The Nasdaq up 0.4% to 27,146. The Dow is trading more than 0.6 lower. We've shed about 318 points, and the Russell 2K is trading down more than 0.8%. As we take a look at the 10-year and how some of our yields are responding to the decision, we have ticked higher. We're now at 440. We were at 436 earlier. The dollar at 98.83. Gold moving lower down to 45.55 a troy ounce. Crude oil 106.85 a barrel right now. We were below the 105 mark about midday today, and Bitcoin starting to fall off, getting back towards that 75,000 mark that it crossed over, 75,780. I do want to check in with Sam, though, on the floor of the NYSE and see what's sticking out to her today, as we still have a lot to get to, but we've certainly had a lot we've covered today too, Sam.
Yeah, for sure. And just picking up where you left off there, Marley, I mean, these high yields, the high dollar and oil not helping equities today. WTI has been back in triple digits, as you said. That's helping push energy stocks higher, one of the outperformers across the sectors. It comes after the Wall Street Journal said President Trump is preparing for an extended blockade. Then we heard Trump told Axios that he will not lift a naval blockade until he gets a deal with Iran to address its nuclear program. He said it's somewhat more effective than the bombing. They're choking, and it's going to be worse for them. That's injecting more uncertainty into these markets about just how long this conflict is likely to drag out now, even though the market has been largely shrugging it off as far as that conflict, largely because of the fundamentals, because they've been holding up. But going into this, sectors looked mixed earlier this morning, but then 10 out of the 11 sectors turned lower ahead of that Fed decision. Rate-sensitive parts of the market under pressure going into the afternoon as well. The Russell 2000 underperforming as well. Looking across the yield curve right now as far as this reaction, you mentioned the 10-year, Marley, 441. We touched 442, I believe, during that press conference. The 2-year, which is notable at the short end, more interest rate sensitive at 493 right now. So we have picked up considerably, seeing that across the 30-year as well, 498.1. So let's bring in Nicole Petalides to talk about everything we got and the man of the moment. I mean, Nicole, no surprise with the decision, obviously. I think the dissents were rather dramatic, as everybody's been saying, and then obviously what Powell had to say, that he's basically sticking around for a time that's TBD.
Yeah, and it was interesting because Powell was supposed to be the spotlight, but then the dissenters took the spotlight, but then Powell took it back.
Yeah.
He took it back by saying that he planned to stay on for a period of time, and really just looking right to the legal attacks and the actions, and so wants to stay on for a period of time. It's interesting, he said prior to all of that, that he had been planning retirement for 3 months in his mind, and that he was going to stay on at least that long. So I took that right away to mean, okay, so he stays on 3 months. But he did say that it would be a somewhat of a normal transition, normal, standard kind of transition, which also says to me it's not 2 years, right, that he's going to stick around, but that he does want to stay on to preserve the Fed as he knows it.
Yeah, and it was really interesting because I think he was asked by Reuters what he meant by saying a low-profile governor,
Perfect.
and then he
Pull
said
back.
like this. He was quite funny. I didn't know that Powell was such a comedian, but he got a lot of laughs out of that. But it was interesting what he had to say. You know, I mean, a lot of uncertainties. They're saying that they don't want to hurry. And when he was asked about the dissents, it wasn't about the decision that they made necessarily today. I mean, except for Myron, which we are very, very aware of. But the three other dissents was more about the easing bias rather than the decision itself, which is interesting because
damn AMD again.
That's the first time since '92 we've had 4 dissents in a Fed, which has been described as pretty dramatic because you haven't had that level of disagreement in decades, which says something.
Yeah, and I'm quickly looking up some of the U.S. listed foreign banks because when that came out, you know, you start to see that you're going to see these U.S. foreign banks now moving lower. You know, he says that the language about easing, you know, the fact that the folks on the committee, they don't want to have an easing bias.
Yeah.
So that hit those foreign banks even harder because it means a stronger dollar too, and sets a hawkish rates tone.
Yeah.
And it also maybe means that Kevin Warsh may have more headwinds than he thinks. If they're uncomfortable with an easing language or bias, they didn't say don't cut now. They said don't even put the word in, you know, like it's taboo. So I thought that was interesting. And there was such a mixed bag on what he was saying about a stronger economy and expanding economy, consumer spending being resilient, business fixed income looking good and going at a brisk pace. There were some bright spots. Housing was weak. He was concerned about elevated inflation. He's concerned about energy, even more inflation. In fact,
Pal, if you haven't noticed, housing had gone up so much under your watch. And you're still saying that it's slow. It's slow because your damn interest rates are way too high. Do you not understand? And the housing cost, my rent alone here, I'm glad I own property, but my rent here went up $300 a month in 4 years because of you idiot. More than 300. My cost of living went up $1,100 under the Biden watch a month. Just the regulars, not counting food.
on average, at the labor force participation rate, you know, you don't have the same immigration or.
My cashew chicken down the street, $7.50. Now I pay $13 or $14 for it. And that all happened under Biden's watch. I don't even go out and eat hardly anymore because I don't want to pay them prices. Special occasions. Used to be about every other night. It didn't bother me one bit to go out and spend $120 on a real good meal if I wanted to, but now I don't even think about it.
And sort of through the lens of less surveys and sort of more market measures. So these are kind of the influences that I think the market is going to have to start to get its head around, because it's been so conditioned with the way that we've always known that how things go. And, you know, if he does start to make those changes, particularly as it pertains to...
The Golden Corral, I used to go in there for $10 to $11 back before Biden was elected. Now it's $17 to eat the buffet. It's been like that for about a year and a half now. It's under his watch where we got such high inflation. Monetary policy.
Sort of peeking out their heads or putting their toe in the sand, like, oh, you know, and we saw some spending for consumers. So, I mean, there is some resiliency here. But the part that really is worrisome is that the job picture, the labor story, the demand has softened, and the job gains remain low. And when you can sort of get inflation down at some point, I feel like, especially if all
1080
comes down. But how do you create jobs, particularly in an environment where Dean Martino Booth said maybe companies are using the excuse of AI not to even hire?
Yeah, that's interesting because you look at the core goods orders that we got today. I mean, that jumped to, 3.3%. That's really used as a proxy for business spending. So it looks like some of the growth is coming from that as well, no doubt from artificial intelligence. And then everyone's looking for the demand destruction from the inflation. But look, ask Starbucks. People are still going out and buying expensive coffees, even though the gas prices are up at the highest rate since 2022. So I guess that says something. I just want to shift gears because...
And they took away the discount, apparently took away a lot of the discounts here,
so people are still spending. I mean, it is that upper end of the K, as people have been talking about, even though not every economist subscribes to that. But just shifting gears, Nicole, I know that obviously the Fed is important, but we've got these 4 Mag 7 members going to be reporting this afternoon, which are going to be all across. I'm just wondering from your conversations today, which one you're the most excited, or they believe, or at least are pointing to the most as to which has the potential for more upside. I heard a really interesting way of describing what could potentially happen this afternoon, and here on the floor, one of the traders said, could it be a King Solomon type of afternoon, where some go this way, some go that way, the market has to choose which way it goes?
Yeah, I think first of all, it's going to be so super exciting, and we can't wait to see the AI CapEx spend, I think. But how much are they spending? I thought Microsoft may be a good one. There's a lot of favorability surrounding Microsoft. OpenAI just came out with the latest version of the chat GPT. I think we're up to 5.5 now. I know OpenAI sort of crushed the market yesterday after that Wall Street Journal report.
Damn, let's go.
Definitely denied and said they're firing on all cylinders. But we know that ChatGPT is not #1 anymore.
Yeah.
But there is so much to talk about. I think all of them will be very interesting and really will set the tone in the AI arms race. How important is the return on investment for this CapEx spending that we're seeing? A lot of cyclical spending. A lot of people want to know, is it for real? Is it coming back to me? Where's the monetization? It's a reality check, and I think it'll be interesting to hear. I mean, Meta was first sort of with the monetization, I think, but we'll see.
Yeah, and I think Meta really is up there. Microsoft certainly is one that analysts have been pointing to as far as, the potential for upside given the multiple compression we've seen, particularly since October, and then it got caught up in SaaS apocalypse. No doubt it has to address some of that as well. Nicole, really appreciate you covering things on these types of days. Thank you so much.
Of course. Good luck to you and Marley. You have a busy afternoon.
We do indeed.
And you made me laugh when you also
I might do that. Low profile.
Yes, I enjoyed that.
Okay, thanks, Nicole. Coming up, Marley, I'll send things back over to you.
Thanks so much, Sam and Nicole. Coming up, we're going to talk more about this Fed decision and what's next for policy. That's all when we come back on Market on Close. Stay with us.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Nicole Petalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time access, data-driven analysis.
Okay. AMD, snake breakout, pull back, higher low, boom. Snake breakout, megaphone. 1, 2, 3, boom. Well, yeah, a little bitty megaphone, but not much. I like it straight across like that, though. Snake breakout. Boom. Snake breakout, pull back to the orb. Boom.
Exchange is Ken Kim, Senior Economist, Senior Director over at KPMG. Ken, so nice of you to join us, and hot off Powell's press conference. I mean, what did you make of, not the decision because it wasn't a huge surprise, a couple of dissents.
Right.
That was a little bit dramatic as far as some of the responses are concerned. But, you know, what do you have to say about his characterization of the economy right now?
Sure. Well, a lot of things are uncertain because of what's happening in the Middle East. So because of that uncertainty, it is hard to provide guidance of where policy might go. So 3 of those dissents were against kind of explicitly or, you know, kind of providing that sort of guidance where rates are going to head towards. So I think given the circumstances, you know, this was the appropriate thing to do. So that was certainly big news. 4 dissents total. One from Stephen Moran for a 25 basis point cut, but that was probably to be expected. But yeah, there's still a lot of uncertainty with crude oil prices sharply higher.
And Ken, you said earlier today you sent over some notes saying that we should be prepared for optionality here. We got Powell saying the Fed is, quote, well positioned to wait for greater clarity. Did anything in his tone suggest that the Fed might be leaning one way or the other despite that?
Well, from his tone, he actually said March PCE inflation would be 3.5%, and that's actually going to be released tomorrow. And core inflation will be 3.2% on an annual basis. So those are moving away from the Fed's 2% target. So if there's any inclination there, kind of encapsulate that hawks are squawking on the committee.
And obviously the market cares very much now about what's going to happen under this new so-called regime, particularly under the Wash-led Fed. I mean, you know, given all the conversation, as I was speaking to Nicole about this with regards to some of the challenges he has in reassuring the committee and the markets about some of the sort of structural, well, not structural, but some of the changes he would like to implement. So certainly around the way that they look at the data, they analyze the data, they communicate the data. I mean, not a fan of the dot plot, obviously, doesn't want to be at the mercy of that guidance as well. I mean, how do you think the market is likely to respond to that given the conditioning we've seen?
So I think it's going to take time for the market to synthesize the changes that are going to be upcoming with the new chair, Kevin Warsh. And it does take time to, you know, get the committee on your side with your new viewpoints of where you think the Federal Reserve Committee should be headed. So given time, you know, Warsh could convince committee members that that's the right thing to do.
Ken, we know now we've got the Senate Banking Committee advancing the nomination to the Senate, likely expected to have a vote on that May 11th in advance of that deadline here. But we also heard from Powell that he plans to stay on as a governor. We got a TBD on how long he'll be on as a governor. But does that complicate Warsh's path forward, having Jerome Powell still as a member of the FOMC with this regime change that he's mentioned now?
Yeah, I think certainly, you know, it would have been much more preferable if Fed Chair Powell did, you know, vacate the governor position as well. But going forward, I think it is going to be really TBD until, as he said, that any future investigations will be both transparent and a finality to them, that he could feel comfortable that he's leaving at a time and keeping the Federal Reserve in a good place in terms of their independence for monetary policy going forward.
Yeah, it was interesting because he did say it was going to be a low profile, and I think he really had to address and clarify whether, you know, there was any misconception about whether that would be like a shadow type chair type of position, right?
Exactly.
I'm just wondering then, Ken, I mean, how are you and the folks over at KPMG looking at the data right now? I mean, you know, he obviously said job gains remain low, unemployment little change, inflation risks are there, housing market weakness, we know all that, but all in all, the economic data has looked pretty resilient in the face of all of this.
It has, but some of that has been the tax refunds that households have been receiving, so they have been spending it on big ticket item purchases like new vehicles, as well as March retail sales, which was quite strong.
Yeah.
So we're seeing consumers, as you say, being resilient despite all the uncertainty and high gasoline prices. But we do feel that if gasoline as well as oil prices, let's say oil stays at 100 through the summer, that is going to push back on consumer spending going forward, and we might have the Fed actually raising rates later in the summer because of that.
And Ken, you had flagged that concern before the meeting today that if we did see those prices of a barrel about $100 or higher staying through the summer, that hikes might come back into the conversation here. Now, Powell fully acknowledged, I'm going to pull a quote here, higher energy prices could put upward pressure on inflation. I mean, he outright said it. Did today's comments move that scenario that you just highlighted closer to reality?
Not necessarily, because, you know, a lot of things could happen in the next few days or even weeks. In terms of the labor market, we did 178,000 new jobs created in March,
Randy.
Decline in February. And yes, combined it is low hiring, but nevertheless the March does maybe give the Fed a slight latitude to lean against inflation going forward. And I think, as Powell indicated in his conference, that's the way they're kind of viewing things in terms of the overall picture.
So just to be clear, Ken, I mean, the KPMG House view right now, is that for the next move whenever
That's
it
funny.
is to be a hike?
We believe so, because
We used to have a bar here, Green Machine, called Fire and Ice. It's now a restaurant. I went in there to order salmon a couple years ago, and they served me salmon that wasn't even hardly cooked. And I said, man, this salmon's not cooked. I mean, we like it flaky, you know, cooked, not uncooked. And they said, well, that's the way they serve it. I said, who serves it? Who serves salmon that's not cooked? It's just a little bitty on the grill, just a little bit, but it's raw in the middle. Who? I said, I've never had salmon like that. I've ate salmon here, there, everywhere. In Jamaica, in Mexico, in Punta Cana. Nobody serves salmon like this. Oh, but that's how they do it. I said, this is gross. I mean, it was the worst meal I've ever had in my life. It was uncooked salmon. The salmon was, I've ate salmon, I don't know if it's in Hawaii that wasn't cooked, but it's mixed in what do they call it? I can't remember what they call that mess. Dang, I gotta look it up, 'cause now I'm confused. Uncooked salmon in Hawaii. Poke. Raw fish salad. Lomi salad recipe. It's called P-O-K-E. And I eat that. I used to eat that a lot. Kind of looks like that. That's a good one right there. I could eat that. But they grilled it. And it was just so gooey. See, this is the way I like my salmon. Flaky. I mean, every recipe in here is like that. I said, where in the hell are you cooking this shit at? I mean, every single piece in here has been cooked. He sold too early, too. Oh, bet it was a solid call. Well, thank you very much. That was very nice of you, Magnificent. See? He's got a good side. Woo! That might be over some of you guys' head. Timus is a wonderful setup. If you want to go long and get filthy rich, don't buy it now. Wait for a pullback. But this thing's going to go to 240. Long. Boom, boom, boom. Look at SPX. I know it pulled back. Do we have time to trade it? Yes. So what we have here, ladies and gentlemen, is 3 black crows with an inverted hammer and a shooting star. Could be a hammer. Not a shooting star, but a morning star. Let's see what a morning star is. I think I got it right. M-O-R-N-I-N-G-S-T-A-R. Morning star candlestick. Morning star. Morning star. Morning star. Morning star. It's a morning star. I usually call them spinning tops, but that's called a morning star. It's morning star. What happened? It dipped. Now I like it. We're definitely at the pivot point. Should I trade it or should I just leave it alone? The 71.25s or the 71.30s at 285, 280. How does the third candle? It doesn't. Yeah, if he kept trading, he'd probably end up divorced. How does the third candle come before the second? It doesn't. The third candle comes after the second. Oh, the third candle, second candle. Oh, that is a lie. I must take down that diagram because it's, how does the third candle come before the second? That's a good question. Now I see what you're saying. It's an imposter. For that, 1 day, 2 day, 3 day is correct. That's a good question, because that ain't right. That's a total misprint. Iran, revenge to the... Iran, revenge for the Marty Red leader remains in place. Well, you know what? Florence loves to bring bad news. She has Trump deranged syndrome. It's definitely a misprint. That's a different looking, that's a different kind of looking morning star right there. Interesting. Morning star. I always call them spinning tops. I missed a killer trade. Well, I got a piece of it. Oh. You talking about a put? Good answer, M.A. Yeah. QCOM had a good day today. It's had a good week. Well, look at that reverse, Randy. I definitely let it sit there and do nothing. I said it was at a good spot. I did say that. I did say that. Didn't I, Randy? Did I say it was a good spot? Say yes. Oh, he thought I bought. No, I was tripping out on the Morning Star. And I called it at the 63. Then I said that was a good spot. Definitely. So like I said yesterday in that video, I'm always back testing, as you just witnessed. I wanted to see if I called that trade out right, if that was a Morning Star or if it was a hammer or whatever it was. So I was educating myself, missed out on a good trade, 100%er. I find the SPX to be the easiest trade I've ever took, along with the SPY. SPY's a little more difficult because you got to switch days. And when it comes noon, I'm out of it. I'm in the next day. SPX, I can trade all day long as a lotto. But I can't with the SPY. sit on your face too. Just be you. It's gonna sit on your face too. Just for being you. Nancy. We love you, Nancy. We're gonna miss you. One more little life there, baby. I wish I still had my gloves. Or my wire. I'm gonna give you some wire brushes. Hang around with that with my washboard for a while. I used to play with wire brushes. Just for being you. Here now, here's a morning star. I found a morning star. Ladies and gentlemen, I found us a morning star. You did. You did. You did. Oh, baby. How dare you? A little bit too big for me, baby. I found one, da na 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 na. Boxing gloves, yes. Sue might have found her a man. She might have found her a man. Just for me and you. There she goes, the morning star. Magnificent. That's how you do it. How you do it? Okay, what time is it? We got 10 minutes left. I hope we learned something very, very magnificent today. I hope you learned something today. Team still looks attractive. Judge. Tonight's big earnings.
Revenues estimated to be around 81 billion, up 16%.
Tonight's huge earnings.
One of the aspects of the report that I'll also be looking at is the Azure growth. That's expected to be between 37 and 38%, which is quite high. CapEx right now, based on guidance, is around $100 billion. So if they increase that, that could certainly add some additional pressure to the shares. And I think the cloud gross margins, which are expected to be around 65% of sales, will be also another internal metric that analysts will be looking at. But I think the aspects too of SaaS monetization, when it comes down to things like Copilot, average revenue per user on a Copilot basis, as well as what they're doing with agentic AI, is going to be important in terms of their earnings. So this will be interesting because, again, it's trading at a discount to historical averages. If you look at their growth rates, they're actually expected to be quite high at around 21% EBITDA growth next year versus this year. But again, the aspects of why it's trading at a discount could be its relationship with OpenAI, which is tenuous at best. So I think that addressing that relationship also will be an important factor that I'll also be looking for in the conference call.
Okay, so a lot of the guests that I've been talking to have pointed out, as you said, that metric to watch out for being Copilot, whether we're starting to see real revenue, because no doubt that'll be some of its way to address the AI disruption fears in this market. And we do need an update on the Copilot seats. Last time, I think the update was 15 million, because that's how it's translating to enterprise, right, as far as those numbers are concerned. And then, of course, we want to know where the spend is going with CapEx, not just about the money, but following the money as well, about how the incremental compute capacity has been somewhere where they've been investing. I know they've talked about that previously. So are they kind of the main metrics we're looking out for, beyond just the headline CapEx numbers, sort of more of the proof in the pudding as to where some of that is actually going?
Yeah, I think that's what they'd also be looking for. They're going to be very detailed in this case, not just the total cloud growth, which I suggest is still quite high, the estimates. So I think it's a high bar, to be honest with you, on this quarter, but they could beat it. But the other thing is, Copilot versus, OpenAI. These are two different technologies that are essentially competing with each other, but at the same time, Microsoft has an ownership.
We got Google, Amazon.
So I think that relationship, is very
QCOM,
a little bit money, and I think also
Chipotle, which is I don't care much for.
Towards Oracle for their.
But yeah, tonight's the big night.
Away from Azure. So I think that's another area that could be, provide a relief, honestly, for Microsoft. So I suggest maybe if they divorce themselves a little bit more further away from an OpenAI, that would actually be a good thing for the stock. But I could be wrong in that regard, but I do suggest, again, if you look at Copilot, using their products, which most people do, it's everywhere across their products. But again, it comes down to monetization rates of those products, which I don't know what they're going to be reporting on.
Yeah, and then obviously that's going to be an important read on the health of the enterprise software space as a whole, because as we mentioned, this has kind of got caught up in that whole SaaS apocalypse narrative. George, we'll be watching. We'll know in a few minutes. Thanks so much for that preview.
Okay.
Molly, I'll send things back over to you in Chicago for now.
Thanks so much, Sam. We are nearing the end of the session. Alex Coffey will be joining us to break down
cleavage
action, and we've got earnings on the way for you from Meta, Google, Amazon, and Microsoft. That's next on Market on Close.
Meta, Google, Amazon, and Microsoft.
Real-time access, data-driven analysis from U.S. equities to global
Not again.
Schwab Network
gotta be power washing.
Subscribe free at SchwabNetwork.com.
I can't fucking see outside. Oh, they taped up my window.
Opportunities don't stop when the market day ends. So neither do they.
They taped up my window.
Schwab gives you round
That's what the Mexicans were saying out there.
100 of the most popular stocks and ETFs, plus a wide variety of
Or whatever. I don't know if they're Mexicans.
all with
Don't sound like
24
Mexican
hours
talk.
trading specialists who understand the ins and outs of 24-hour trading. No matter the hour.
I'm Alex Coffey.
And I'm Jenny Horn. This
Jenny
is
Horny?
Trend Investing, where we track the trends shaping tomorrow's market.
Hello, my name's Jenny Horny.
Energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
That could certainly be a short to near-term catalyst.
Next Trend Investing, 1 p.m. Eastern.
Only on Schwab Network.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest.
Trying to figure out how to get rid of this.
Watch list ready. 8 a.m. Eastern. Morning Movers only on Schwab Network.
I don't know if I can get rid of timing cells.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
We are back here on Market on Close. I'm Sam Bartis on the floor at the New York Stock Exchange alongside Marley Caden over in our Chicago headquarters. So we've just got a few minutes left in today's session. It's going to be very
Meta dropped into close.
Host of Next Gen Investing to help close out the session. As we're going to skip across the finish line together and get across these earnings, we're going to be hearing from four of the biggest companies in the planet, and we're going to be hearing it in very rapid fire time and fashion, Alex. So thanks so much for holding our hands as we do this. I'm just wondering, you know, as far as the market positioning, a little bit of a different picture to what you and I were talking about earlier today. I'm seeing a lot more red on the screen. Obviously, we've got through this Powell press conference. The VIX hasn't budged a whole lot. Just walk us through what you're seeing right now as far as the levels.
Yeah, a few things stand out, and I guess we'll start with volatility since you mentioned that. You know, volatility has remained relatively elevated throughout the duration of this rally off the recent lows. So to me, that's indication that there's still uncertainty around geopolitics. There's still uncertainty around earnings, and that uncertainty can be in both directions. So we've gotten back to all-time highs, but where volatility is relative to where we typically have been throughout history on all-time highs, it's in the lower, kind of middle-ish range of that, because, parts of 2020 and 2022, when we recovered, we still had pretty high volatility post-COVID. But all in all, I guess I look at this and say, I'm not surprised that basically nothing that has happened so far this day, throughout today, is ultimately going to be the story when we come in tomorrow, because these earnings are going to be so critical as to what the market's about to do. So today's been about, reacting to the Fed, which did have some surprising elements, and I'm sure you guys have explored throughout the hour, and positioning ahead of these earnings, which ultimately are going to be the juror for what today looks like.
And Alex, as we look at the jurors across the board here, which one is going to be the most impactful? Or which one has the setup to be the most impactful?
Well, I think there's a couple ways to answer this. Microsoft, Amazon, and Alphabet are bigger than Meta. But Meta is the highest beta of the names, and it's also the one that seems to be most aggressively investing relative to its own kind of cash flows and revenue into the AI race. And so I'm personally most interested in Meta because I think that it represents the aggressive AI investment side. And it's going to be really nice to contrast that with Apple tomorrow, which has taken the almost seemingly polar opposite approach in terms of being a little bit more conservative, attempting to kind of play kingmaker and sort of watch the horse race and then pick a winner, halfway through it. Remains to be seen. Maybe both strategies can be successful, but they're certainly different approaches, but they're also starting from different places given that Apple already has a tremendous device installed base that gives it a little bit more leverage than maybe a company like Meta that is entirely software based until recently and maybe a little bit more exposed to the kind of disruptions that AI presents.
And just quickly, we've only got a minute to go now, Alex. Obviously, we've seen some companies being rewarded for their good earnings today. Anything stand out to you about the positioning ahead of very consequential afternoon?
Oh, that's a good question. I mean, it's hard not to realize and see the Nasdaq's outperformance today. So much of the strength continues to be semiconductor driven. Seagate stands out today, and then don't sleep on a name like Bloom Energy. These AI infrastructure stocks continue to drive the narrative. Well, who's paying these companies? It's the companies that we're about to report on in the next couple minutes.
Yeah, Seagate, Bloom, Visa, T-Mobile, Starbucks, all high today. Pretty flat on the S&P 500. Looking for some direction from these major companies this afternoon. We're just minutes away. Here's your bell.
Damn, Amazon dropped. Microsoft boomed. Meta dropped.
So as Alex pointed out there, we had the Nasdaq 100 outperforming as we did have some of these tech earnings very much pulling their weight. The chip stocks were rallying once again after taking a breather in recent sessions. The SOX was up 2.5%.
Microsoft boom.
Seagate up 11.5%.
Hit my support on Meta.
Names actually putting on some nice gains as well, particularly as we head into Samsung's earnings tonight. That's going to be the next big one to drop as well post these Mag 7 earnings. Of course, we did have a split picture across our Mag 7 cohort today. The S&P 500 flat as a pancake as we go into
Flat as a pancake.
a very consequential afternoon here, as I mentioned.
I love you.
Really dictate the direction of the market for no doubt days to come.
She's so sexy.
Dow Jones shedding 280 points, down 0.6%, and it was a similar percentage point decline there for the Russell 2000 as we did see higher interest rates.
And Microsoft is the one.
Excuse me, the 2s, the 10s, the 30s rising today, particularly as Prow's press conference went on. We have learned about some of those dissents as well around their
Well, that says it.
easing bias.
I'm going to take a break.
Numbers hitting the tape right now, so Marley, I'll get across to you with those numbers.
Yeah, we've got Meta coming across right.
So again, I only had one red trade today, and I think if I'd have held it, I would have been green again. But I sold it for the loss. But I made it back. So one red trade today out of 6. Now I consider that a good day. Man, look at that. Meta right to my support level. 628.21. And we got Google and Microsoft killing it. And we're back to even on Amazon. Meta will probably come back up too. Meta's not an innovator like Elon Musk. So I don't know why the stock should be worth more, but it is. What does Meta produce? Nothing. Maybe that's why. What Elon's invested in takes money. So I'm going to get out of here. I've had a good day. Besides everything that went on, I got my Medicare Advantage plan took care of. That was a tough. That was probably one of the hardest decisions I've ever made in my life. And I really didn't put much study into it because I just get bombarded with phone calls. And I don't know what to believe. It's kind of like the media today. You know, you get bombarded with trash talk, and you got to use common sense to weed out everything. And it's important that you do that, not pay much attention to propaganda. You know. I'm getting to where I'm glad I left the left. Because there's so many hypocrites out there. I didn't know what to believe anymore. So I just went with my gut feeling. Same as stocks, same as the propaganda you hear. That's why I like listening to Schwab. They don't throw that much politics in it, and you don't got every other opinion on, and you'd be like riding a roller coaster. You wouldn't know what to do. SPX had a nice rebound. At the end of the day. More, I mean, today was a clean day, besides getting stuck in that one trade. And pow. I should have recognized that. I didn't really take that much into consideration today in my game plan. So that's probably a bad on me, because I know he brings volatility, and I know I sit there and argue with him, because I don't, I'm not a professional. I don't sit in his shoes. He's got a way of doing things. I like to predict. He likes to not predict. He likes to read data, and data points to me are never right. I mean, I've been fooled so many times by their data points. So I don't know where he gets his data points. But I can't. If I had his job, I'd be out in the streets talking to people. I wouldn't be listening to billionaires that are making killer interest rates on their billions that they have in their frickin' bank, or wherever they have it, in their bonds or whatever. Not picking stocks, It's like a lot of these analysts, they don't trade stocks. Becky Quick, just the list goes on. They're not allowed to trade stocks because it's like I made it to where I didn't want to date any chicks I worked with. Dated when I worked at the restaurant out of high school, or in high school. It was a free-for-all because the chicks were all cool back then. But you tried to date a chick at work. So, if you're in doubt, go back and watch some of my videos and you can get some kind of strategy of how I trade stocks. I got some great videos out there under video. If you go to live, you're going to be getting the long, all day long crap, and you ain't got patience for that. But the titles say things for themselves on the YouTube channel. Thanks, YouTubers. We're going to cut on out of here.